The sector rallied on the back of those regional numbers on the 16th of the month. And then we've got a couple of themes in the auto parts and wider auto space. Continental, for example, in focus with some talk of incremental auto margin improvement next year, and Volvo Trucks, a negative sentiment there around truck demand in Europe, Guy.
Okay, here we go. Time for the opening trade. Remember, ASML closed Friday at circa 700. We're going into today's session around 650. We've still got to fill the gap. So let's see how the FTSE is opening, but let's critically see how the AEX is going to open this morning. How fast will we get that stock open? How fast will we get that market open? Let's wait and watch. But certainly the early indications are a fairly flat opening coming through out of London. The stock 600 is up by 0.1%. The IBEX is up by 0.5%. So some better news maybe coming through from Madrid. But we wait for the AEX this morning, and we really wait for the CAC as well. Both of those two markets absolutely critical, as they contain, of course, ASML and LVMH. How are those two stocks going to trade today? Very important for this European session.
Yeah, let's talk you through some of what we're seeing on the sector side of things then. Consumer products and services is by far the biggest downside drag here. And we have LVMH falling quite substantially. Kering also down on the back of that. Christian Dior down on the back of these numbers out of LVMH. So real negativity for the luxury sector. As I say, it rallied quite a lot on the back of those Richemont numbers. That was compounded, that positive sentiment about the US, by the Burberry numbers as well. All of that led the sector higher. And today we've heard something a little more lackluster. Doesn't matter how much Arnaud thinks there's a mind of optimism in the United States. Right now, the markets are selling luxury stocks. In terms of, so that's the downside, but we are waiting, I think, still to get an opening price on ASML, and that might provide us with the upside.
Stock's halted at the moment, by the looks of things.
If I bring you some of the other earnings stories that we've got in terms of stocks that are moving at the open, you've got WH Smith up 5.7%, Rummy Quantro down 2%. As Joe was telling us, they had that sales decline in the US, consumers cutting back on their drink spending there. Volvo Trucks up 3.2%. We also had Axo Nobel, and that's up down, I should say, 4.2%. So as we wait for the CAC and the DAX to open, those are some of the individual movers.
So let's just think about the range that ASML has traded in over the last few days. The high over the last few days, 752, we came through at the end of play Friday at kind of just a little bit further north than 700. So we were fading into the close on Friday, but still we had a 7 handle attached to that stock. The stock then gaps lower Monday morning as we see the DeepSeek story come through and bite. We rally a little bit. Yesterday we just go sideways. We're expecting the stock to rally this morning. We're waiting for the opening trade, but it's still got a gap to fill just to get back to where it was on Friday, and it's got a big gap still. So in some ways, yes, we're seeing positive numbers this morning, but we're kind of progress have we really made?
Well, because these numbers, they don't tell you a huge amount about the thing that the markets are worried about, which is DeepSeek and its impact on demand for expensive machines. It tells you that they've delivered really incredible performance over the last quarter, and the orders for the first quarter, they're upgrading those. So that all sounds so far so good. But if people have longer-term concerns about the sustainability of demand, that's something we can't answer based on these numbers.
Do you look at the ASML numbers today and say, I have to wait for Microsoft, I have to wait for Meta? Now, Meta's already pre-announced because it got burnt last time in terms of what it's going to be delivering on CapEx. We already kind of know those numbers. What are the other big hyperscalers going to be doing? And does that model change going forward? Is the guidance in terms of CapEx, does that change? So do you wait on ASML and wait and watch and see how those numbers progress before you make a decision on whether or not this stock kind of rallies significantly from here.
Of course, TSMC already upgraded its guidance on CapEx spend. So this is to Tom's point. You've got the 2025 period cushioned. It's the period beyond that.
But the ultimate customer is the hyperscaler. And do you take your lead from there in terms of what you're going to be doing next?
Yes, let's get into all of this with somebody who knows about buying tech equities. Now, let's have a conversation about tech stocks. And as a walk-up to that, let's think about what we heard from Cathie Wood yesterday. ARK Invest's Cathie Wood joined us around this table to reflect on Monday's punishing tech sell-off. Let's remind ourselves of what she had to say.
I think what it's telling us is the cost of innovation is collapsing, which it has been doing. I mean, the cost of AI training is dropping before this, 75% per year. The cost for inference, 85 to 90%. I think it throws the weight more towards inference chips from training chips, and so NVIDIA's highly exalted, and deservedly so, in the training chip space. Inference is a lot more competitive.
That was our conversation with Cathie Wood, reflecting on an incredible week in tech already, and we're barely even halfway through it, not even halfway through it. Let's just tell you that ASML has now opened. The price of those shares up by 10.5% this morning. So the market is reflecting a lot more positivity around the numbers that we've heard about this morning. We'll come back to the ASML story, no doubt, shortly. But let's go to Alison Porter, Portfolio Manager on the Global Technology Leaders team at Janus Henderson, who joins us this morning with her thoughts on the sector. Alison, nice to have you with us. We were just hearing from Cathie Wood there, and she was talking about how, in her view, we've learned this week, because of what DeepSeek has told us, that the cost of innovation is collapsing. Now, then there are some who raise a skeptical eye about regulation in the United States, about how exactly DeepSeek did this for such low cost, whether they were piggybacking on other AI models, and maybe that matters and maybe that doesn't matter in terms of where the sector goes next. Alison, what are you taking away from the DeepSeek story and what it does to the maths behind these expensive chips?
Yeah, I think the last week has seen, AI capex announcements from Stargate for over 500 billion, and then through to the DeepSeek story that really cast a concern initially on the lower training cost. Was that going to really damage the capex story? And then I think people have now started to focus on the fact that this cheaper inferencing does make more innovation and can drive more demand. I think, they talk about Jevons paradox, which is, as efficiency ramps and costs comes down, you see demand and you see a broader range of applications for AI. But I think time is a key dimension here. It will take time for these cost reductions to flow through for all applications to be able to embody what DeepSeek has managed to do in terms of open source, and it will take time for the demand for all of these other applications to really ramp. And we'll hear a bit more about that when we hear from Meta's earnings and Microsoft's earnings this week.
Just a little more, Alison, on the time horizon that you would expect to understand fully what it is that DeepSeek really brings. Because on Monday, we heard from a guest who was saying, look, it might take months for these big tech companies in the United States to work out how DeepSeek is doing what it's doing, and therefore what it means for their businesses. But you sound as if we might get some answers this week.
We'll get some insights, I'm sure. Remember that DeepSeek was also built on the back of Llama 3, Meta's open source large language model. So these companies are iterating constantly. I'm sure we'll hear from Microsoft on further developments as well. So I think, what the key focus this week is going to be on fundamentals, what kind of returns that these companies are already seeing on their AI investments. And really what, DeepSeek represents is this opportunity and this balance between CapEx expenditure and also the OpEx implications longer term, which we've not heard a lot about, that actually would be able to innovate and OpEx may continue to trend lower.
Alison, good morning. It's Lizzie here in London. I think I'm right in saying more of your portfolio is Microsoft than Meta. When you talk about the open source element, do you agree that Meta's in a better position to deal with the DeepSeek threat because its AI model's open sourced? Does this put you off Microsoft at all?
No, and I think, look back to artificial intelligence as a wave. And, when you look back even to the internet wave, we did have a surge in open source and Linux, but that didn't stop Microsoft and closed source models also doing very well. So we think there will be more than one route. And open source is certainly driving a lot of the pace of innovation just now. But we expect OpenAI and Microsoft and others there to be more than one method of innovation throughout this wave.
And you also hold Apple. We're waiting for their earnings too. Where's Apple in this AI evolution? How much could the DeepSeek developments actually help Apple?
Well, I think, Apple has been the winner in the mega caps over this last week, despite the fact that there's incremental concerns on share loss in China. And we will see some form factor change in Apple, which usually drives some upgrades. But really, DeepSeek, dramatically decreases some of the memory requirements for inference. And that makes, using AI on the edge more viable. And that really fits into, Apple's position in the ecosystem. It's very well positioned for all of the data that we share and being able to use AI at the edge.
Alison, how close are we, or are we at peak capex?
I think, the step up that we've already seen this year from last year is less for many of these companies than it was in 2024 versus 2023. So, there's the peak in the absolute number, and then there's the peak in growth in capex. And I think, we are with the announcement of Stargate, with Reliance, we're seeing capex announcements around the world from many sovereign funds. So we may see peak capex announcements this year, but the expenditure will continue to grow over the next few years because we're really building out for artificial general intelligence, not just this generative AI wave.
And what's the ROI on this? Is that where the question should really be asked in terms of the ability of every dollar spent to deliver a return? Do we need to question that more now post DeepSeek than we did before?
I think, the commoditization of large language models, does create a focus on what the monetization of AI will be, just as we've seen in past waves in the mobile internet and on the internet itself. I think we will see, advertising tends to be a place that we start to see that return come best. But as I mentioned earlier, I think a key portion is seeing what OPEX savings companies get, because ROI is not just about the incremental revenue generation, which may take more time, but it's also about the cost that can be saved over the next 3 to 4 years.
A headline crosses: Alibaba touts new AI model superior to DeepSeek's and Meta's. The competition is certainly heating up. Alison Porter, thank you very much indeed, Portfolio Manager at Janus Henderson. Let's take a look at what the Core 6 looks like this morning. There's one name that certainly does stand out, and that comes in the form of ASML. However, I would just caveat this. Go to your Bloomberg terminal, look at the 5-day chart. We filled the gap. We're still a little softer, though, where we were versus I think it's probably 11 a.m. on Friday. So this stock is rallying and roaring today, but in reality, actually, maybe for a longer-term investor, very little movement in the stock over a more medium, maybe even a short-term picture. Joe Easton's here with more. Let's figure out what's going on out there, Joe.
So ASML really the standout, as you say, Guy. That stock actually having its best intraday gain in 4 years now. So that stock was up around 12% at the open. We're now up around 10%. And seeing that feed through, ASMI up 7%, and the other rivals, BE Semi, Soitec also gaining a lot of green coming in, given the orders smashing expectations for ASML. Then, in terms of luxury, it's one the exact opposite in terms of expectations did come up ahead of these results, given we saw beats for Burberry and the likes of Richemont. But we are seeing LVMH now coming down almost 5%, and the peers also sliding as well. Expectations coming back down as China continues to slow for LVMH. And also drinks, it's another China story with Remy Cointreau giving very downbeat guidance once again, warning sales could drop 18% in the year ahead. That is the low end of the range that they previously gained. But a lot of those drink stocks have been absolutely slammed over the past couple of years. Potentially some of that priced in, but 3% declines for Remy and also Diageo slipping on the screen as well there. Then in terms of Volvo, a lot of negativity around the orders, but actually the orders here in Europe were better than expected, according to analysts. I was reading the City Note a moment ago, and they were saying while Asia continues to be weak for China, Europe looking pretty good. So that is the reason why the stock is up for Volvo, I suspect. Then in terms of M&A, Dowlais. Now remember, this is the company whose roots go back to the old GKN company and Melrose. It was spun out of Melrose, and now there is a takeover offer coming from a US company called Axel, and that is at a decent premium, but we're not coming up as high as we probably should be. That was a 25% premium on that, but it doesn't seem to be coming up to that level. Finally, Pennon in the water space. That one is hit on a rights issue. They've announced to shore up their financing, so the stock slammed on that news this morning here in London. It is diluting the stock. It was at a massive discount for that stock. So one of the worst performers is Pennon here in London this morning.
Joe, thank you. Joe Easton with a rundown of some of those stocks on the move. It really is a fascinating morning then, with some recovery in the tech themes, but selling on the luxury sector. So that weighs on the CAC 40, as he's been telling us. Let's talk about luxury. Coming up on the programme, LVMH's CEO, Bernard Arnault, says a wind of optimism is blowing through the United States after Donald Trump's inauguration. Does that mean better times ahead for the US performance of these luxury names? Shares in the luxury giants are lower today after fourth quarter earnings. We'll focus on the sector. That's next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. We are 18 minutes into today's session. The stock 600 higher 0.4%, boosted by earnings out of ASML. Those shares currently up more than 10%, inching towards 11% this morning. But luxury really weighing on the CAC 40, lower 0.4%, and LVMH down 5% nearly this morning after their earnings. And we can dive into that now with Andrea Felstead. The fashion and leather goods sales at LVMH falling in the fourth quarter, casting doubt on prospects of a quick recovery in luxury demand. Andrea, our Bloomberg opinion columnist covering the luxury sector, joins us now. Andrea, I thought that LVMH was cool right now. These results do not reflect my Insta feed. What's going on?
Well, you're exactly right. Louis Vuitton is still cool, but Dior is cool. Dior, which has been really, flying for the last few years, is cooling. Loewe is on a tear, but you've got other bits of the group, wines and spirits, the duty-free sales that just aren't doing so well. I mean, I was surprised that it didn't beat more. We had Richemont really smashed expectations. Even Burberry was still negative, but it was nowhere near as negative as everybody expected it to be. Based on that, I thought LVMH would be better. So I was surprised they didn't outperform more.
So the market's got the right reaction this morning?
Oh, definitely. Yeah, definitely. We've had this. It's the biggest exposure to the US of all the luxury companies. The US has really been improving since the election and markets melting up. And until recently, there seems to have been a real upsurge in buying in the US. And Bernard Arnault said he expected the US to boom, but given all those positive factors, it just wasn't quite as sparkling as Richemont, for example.
Do we think that Lizzie needs to upgrade her Insta feed? Maybe to get a bit better steer on what is happening.
What about talk about breaking this business up? Is that something we should take at all seriously, Andrea?
I think it is. I mean, we actually a year ago did a sort of exercise on what you would get if you broke LVMH up. And if you put the Dior and Vuitton anywhere near the Hermes multiple, which is, over 50 times, obviously it won't be at the Hermes multiple, but you give it Hermes multiple with the appropriate discount. At the time, that had the same value as the whole of the group. Now, numbers have changed a bit now. Dior's come off. Obviously, the whole industry had a slowdown last year. But this is still an exercise to think about. Bernstein said last week that the wines and spirits division should be spun off. Arnault said yesterday that that wasn't on the card. He was giving the division 2 years to turn itself around. But you've also got the sort of the duty-free business. You've got wines and spirits. So it is the idea that you take LVMH much more to a pure luxury group to get it closer to that Hermes.
Well, yeah, I mean, I suppose that's what it would have to be to justify being comparable to something like Hermes.
Exactly.
Can we linger a bit on what he said about the United States, though? So clearly there's a bit of disappointment in the numbers this morning. They don't stand up to what we heard from Richemont earlier on this month. But he's come back from the US and he's all full of Trumponomics, I suppose, isn't he? And the fact that what he sees is a mind of optimism, certainly, well, probably around the Trump administration, and that's maybe where he spent his time circulating. So what do we know about the read across? This is a really important market for LVMH, the United States.
Oh, totally. It's going to be the market that saves luxury this year. China, he talked about a gradual recovery of China, could take 2 years to get back to normal. The US market is very correlated with stock markets, with Bitcoin. Obviously, that's been on a tear until recently, so that's great for momentum. Since the election, there does seem to be a bit of relief that there wasn't a sort of a muddled outcome, and people seem to have, even those disappointed with the results, seem to have moved on, and they seem to have been spending once more. So the US is going to be really important to luxury this year. The downside is there could be tariffs, so that's obviously one of the reasons he went to the inauguration to get on Trump's good side.
Friends in high places.
Exactly.
Andrea, on that point, you know these two personalities. How much influence does Arnault have over Trump when it comes to European luxury tariffs, US on European luxury? They go back decades, these two.
Well, Arno was very was sort of close to the Trumps have known each other. He was one of the first chief executives to visit him after his first win. He opened a plant in Texas a few years ago, and reading between the lines, from what he was saying last night, it does seem as if he might do more of that manufacturing in the US for Louis Vuitton, because he was very warm about the fact that you get tax cuts in some states. Opening these plants is subsidised, contrasted it to France, where companies are taxed to make in France. So, we could easily see that's where LVMH is going. Whether he can persuade him not to put tariffs on luxury goods, I'm not sure. Even if Bernard Arnault can do that.
You can count on me, Andrew. I've already done my analysis of Melania and Ivanka Trump's outfits. Bloomberg Opinions, Andrea Felstead, we thank you.
Yeah. I'm going to turn to tech. Much safer ground for me. Let's talk about what is happening with ASML this morning. The shares certainly are on the rise. The chip machine maker soaring after its fourth quarter earnings, smashed estimates. Just take a look at the 5-day chart, though, in terms of the context of where we sit this morning, and put this rally into a little bit of context. You've got to factor in, obviously, what's been happening with DeepSeek over the last few days. Sarah Jacob joins us now from Amsterdam. What do we make of these numbers? They are clearly good, and they clearly give a very solid 2025 picture. But is it possible to determine what happens beyond that? How will the market read what we're getting here? Clearly it's positive, but it doesn't take us anywhere beyond where we were Friday in terms of the share price.
Good morning. Yes, ASML booked, more than twice as many orders as analysts expected. The CEO has said that AI is the clear driver here. He said that the firm believes that AI is creating a shift in the market, and it's seen customers benefiting from it. So if you look at fourth quarter particularly, we've seen that the demand has been driven by ASML's most advanced chip-making equipment, which is the EUV machines. It reaffirmed its forecast for 2025, and it's basically said its view on the long term is still very positive. So that's sort of what's giving the market reassurance today.
Okay, so that's the reassurance. But what does this tell us then, Sarah, about future demand for chip-making machinery that ASML makes? Because the concern wasn't what they, going into these numbers, I suppose, was not what they sold in the fourth quarter, or even maybe what they'll sell this quarter, but the more medium-term outlook.
Yes, I mean, the elephant in the room is DeepSeek, and ASML stock faced a rout on Monday, as we saw, as did other semiconductor-related stocks, on concern that the new AI model that's come up from the Chinese startup DeepSeek can provide comparable performance to what Western chatbots do, but at a fraction of the cost. So it's basically raised concerns that this could be a disruptor to the current AI business model, which depends on high-end chips and where ASML plays a key part. It's important to note, though, that ASML has not said anything about DeepSeek in its press statement this morning, but people, investors and analysts will be closely watching for any sort of management commentary at the press conference, which starts at 11 a.m. CET today.
Okay, Sarah, thank you very much. Sarah Jacob joining us in Amsterdam with the latest there on the today story on ASML and the longer-term story. So certainly a fascinating one we continue to watch. Coming up on this programme, we will rejoin Kriti. She's still in Cannes at the EPEM Private Equity Conference, of course, where she'll be speaking to the private investment house Ardian. Stay with us for that conversation. Francois Jeffagnon will be speaking to Kriti in front of those yachts. We will bring you that conversation shortly. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is... Because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Sorry.
My voice, my conversation, my poetry, you know.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
.30 a.m. in Stockholm. The Riksbank has just cut, as anticipated, by 25 basis points, down from 2.5. This was expected to be maybe the bottom of the cycle. So the question now is, where do we go from here? Is the bottom of the cycle maybe 25 bips a little lower than where we are now? The Riksbank rate forecast made in December essentially holds is the line this morning. The Riksbank saying its forecast for policy rate made in December is actually the one that it is going to stick with. So are we going to stick at 225, or do we ultimately go lower from here? Remember, the Riksbank started earlier than pretty much any other major central bank out there and has continued to cut. I think we've done 120, my maths could be wrong here, 125 now. The Riksbank is saying it's prepared to active outlook changes, i.e. there is the possibility still of a further 25 bips coming off, taking us to 2, which I think will be 150 off where we started.
And you wonder what could change the outlook. And for all of the central banks around the world making decisions, whether you're in the United States or elsewhere, there's the possibility of the Trump effect, what Trumponomics the second time round is going to mean for your economy. Because what it does to the dollar has an impact here. And we've already seen that the Swedish krona has been weakening, of course, against a strong dollar. No surprise there. That's been the longer-term story, as we've seen elsewhere, really whipsawed by the strength of that dollar. And that weakness in the krona has an impact on imported inflation. So that's going to be something, a dynamic that the market is going to keep an eye on.
Yeah, but the Swedish krona barely budging off the back of this, despite that willingness to do more. The question, though, as you say, Guy, really, when does that next cut come? Could it be March? Could it be the second quarter? And really dependent on the uptick in domestic demand, is it maintained? So we have to wait for more data.
We are getting towards the bottom of the cycle, though. We're almost there. The question then is, how long do you stay there? And you just kind of think of the Riksbank as a kind of forward indicator. There's a big debate happening in the States about when does the next hike come. When could the next hike come for the Riksbank? Is that kind of the next thing that we need to logically start thinking about? How long do we stay at the bottom of the cycle? Let's call it circa 2%.
There you go. This is euphemistic. The Riksbank sees particular uncertainty about developments abroad. I'm sure that is a copy and paste line that you can take to many central banks globally in this year of 2025. Let us return to the private equity sector now, where, of course, they're also thinking about that unpredictability of policy making from the White House. Cheaper borrowing costs and strong equity markets have given some companies the confidence and capital to pursue deals, with private equity firms reopening their checkbooks to hunt for bargains in the public markets. Let's go back to Cannes and rejoin Chrissy Gipser at the EPEM Private Equity Conference. Chrissy.
Anna, thank you. I mean, that uncertainty that you were just talking about, that is the exact conversation that we're having right here in Cannes in the south of France, really talking about not just the interest rate volatility, but the geopolitical volatility as well, and how governments can react, incentivize, or decentivize some of the investments as well. I have the perfect guest to talk about it here with me right here in Cannes, Francois, I'm going to say this right, Francois Jeffagnon, and I practiced that for the last 24 hours, the member of the executive committee at Ardian. They oversee about $180 billion of assets under management, and of course have a pretty big stakes we're going to get to in a moment. A pleasure to have you here. Thank you so much for joining me.
Likewise, Christy.
Of course. Well, we were just talking in the studio about this idea of uncertainty, about geopolitical volatility. We're here in Cannes. Things are sunny, things are bright, they seem okay, but the conversation around France really has been this kind of lack of stability from the French government. Is that decentivizing investment?
Well, you're right. There's more cautiousness, there's more uncertainty around politics, not just in France. I think this is a broader topic around Europe. But, you know, when it comes to private equity, we at Ardian believe that even more than macro or politics, what is important is to focus on companies. So what makes us so enthusiastic? Indeed, the sun is out, and it is also on the ground, because we see many interesting opportunities. We can find, you know, very interesting companies with strong leadership, acting in good sectors like tech, like business services, or even some industrials, where those companies are growing, are being very international. So we see that sense of quality. Quality prevails today and will continue to prevail. And what is important for us is that we want to invest in the future champions of Europe. We're able to do this, so we see the battles half full, not half empty.
I mean, a very optimistic take when there is so much of that doom and gloom around. A lot of that is perhaps reflected in the capital markets. I mean, there has been this idea that, okay, the capital markets are finally warming up. We're finally getting to kind of getting rid of some of the glut that's been backed up in the system. Is that too much excitement for minimal progress?
You're right, indeed, that it's warming up. When we look at figures, you know, on the M&A market around PE, for instance, you know, 24 was probably a rebound around 15% compared to 23 figures. Still, when we put that into perspective, on the long history, it's still a rather low figures. So, not so great, but I think we need to have a broader view. For instance, in PE, it's not just about M&A, it's also about the secondary market that can provide liquidity. Continuation fund is also another area. And when we see about fundraising, it is more challenging. But you may have seen that we have announced over the 2 recent weeks that we have very successfully fundraised 2 flagship funds. You know, our secondary and expansion businesses, 50% above last vintages. So I think that speaks for itself. There is interest, there is liquidity, there is optimism.
There certainly is. Let's talk about one of those perhaps sectors that are seeing quite a bit of that optimism. This week especially, quite a bit of volatility in the AI space. So we know all, I think we're quite aware of the market turmoil on Mondays after the DeepSeek kind of announcement or maybe wake-up call in terms of the cost of capital needed to invest in AI. But it feels like private markets broadly, I think Ardian included, has been kind of looking at AI for quite some time. What is the next leg of growth in that space? Is it just about getting the technology, or is there a next level to that?
We have been looking at AI for a while, indeed, and several-fold. The first one is obviously how we can invest in that space, and much more than just investing in those who build the large language models. We think it is safer to invest in those around services that provide services around AI. So it's a bit like in the gold rush. You want to invest in those who provide shovels and picks, which I think is safer. So that's one subject. And the announcement of DeepSeek, indeed, this week is comforting us on doing this. The second topic is around how AI can help our portfolio companies to further disrupt their competitors and also enhance their efficiency. That's very interesting, and we are working a lot with our portfolio companies in that space. And probably the last point in terms of growth is how that is going to impact organization. So it's not just about tech, it's much more about adoption and use cases.
Well, does that create then, in this kind of frenzy or gold rush, as you put it, around the AI space, a valuation glut or a valuation premium when it comes to the pricing of some of those assets?
AI brings growth and brings differentiation. So those assets that will be able to ride that wave, which is a long-term one, are going to get a premium. We see the market today being very polarized between the winners and the losers. If you're on the loser side, you will get a discount. If you're on the winner side, you will get a further premium.
Let's talk about another very hot area in PE, and that, of course, is the infrastructure space. We should make a really important note for our global audience that Ardian is the largest stakeholder in Heathrow Airport right now, which is looking to expand. We know Rachel Reeves over in the UK has been very vocal about the plans around the airports as well. Outside of infrastructure, though, if you're a PE investor and you're looking for the gold rush moment outside of AI, outside of infra, where do you go?
So our LPs, you know, they question us about the returns that we have made. They are very happy with it. But much more going forward, are we going to keep delivering these returns and create value? I think this is the word. So how are we doing this? Sustainability is one way. Digital in general, not just AI, is another one. But I think it goes much broader than this. Pricing policy amongst our portfolio companies is a big topic. HR management as well. Talent attraction, talent retention is a big subject. So by us, you know, we have many operating partners, we have strong teams that help us and support portfolio companies, and this is how we create value and today and even more in the future.
All right, so let's bring this full circle right to where we started with around the geopolitical certainty. How much certainty do you need from governments, not just in Europe, but even in the United States as well, to execute some of these deals, especially when, given so much of the kind of excitement around PE, regulation has also stepped up. You saw this in the previous administration in the US. There are talks about it in the UK, certainly in France as well. How are you thinking about the regulatory aspect of this?
We are very respectful of governments as they provide, you know, regulation indeed, which is primarily a framework under which business and PE can operate. This is very important. And then it's our job, and it's also the job of government, to make sure that entrepreneurship, you know, is a strong, not just word, but a reality. And that's what, again, brings us optimism, is that we see still many entrepreneurs that are being able to grow. So this is, I think, the way to operate well, you know, in the current environment.
But then do you pay maybe a little bit of extra attention then to where maybe some of the budgets are going then from a government space? I'll give you an example. In the United States, Donald Trump talking about investing very big in AI. Same thing in China. Giorgia Meloni has been very vocal in Italy in terms of investing in telecom infrastructure, investing in things like defense as well. Do you follow the fiscal budgets to find maybe the longevity you need for the PE markets?
We sure do follow indeed what governments say. This is very important, but even more, you know, this is our job, is to focus more on the quality companies on which we invest and how they can grow further. So it's much more, you know, a bottom-up process. On the ground, this is our job, and this is our primary area of focus, and this is what we're going to keep doing in the future years.
All right, we look forward to hearing how that goes. Francois Chiffignon, the member of the executive committee over at Ardian, and Guy, he's making this really crucial point that even though I think everyone in the PE space is fairly optimistic about the future of private markets, there are still certain things to be keeping in mind. The geopolitics, the government aspects, the pricing, of course. I think I found maybe the lone cautiously optimistic voice in the PE space.
Cautiously optimistic, we'll take that. Kriti, thank you very much indeed. Doesn't Cannes look fantastic down at EPEM? Great day to be there. Let's talk about kind of an extension of that conversation. The UK Chancellor is going to unveil her ambitious plan for an infrastructure boom a little bit later on today. She's going to do so in Oxfordshire. We're going to look ahead to Rachel Reeves' speech and the prospects for expansion of Britain's airports. What else is she going to be doing? We'll talk about all of that next. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
I'm not going to speculate on any decision in relation to Heathrow, but I've been absolutely clear what the number one priority of the government is before the election and since the election, and that is growing our economy so that it's thriving, growing it in a way that we get wealth creation in every part of the United Kingdom, and growing in a way that people feel genuinely better off. And I think that's a key test of what we want to achieve in government.
UK Prime Minister Keir Starmer speaking to Bloomberg yesterday right here at our European headquarters, not stealing his Chancellor's sandwiches. She's going to be speaking later today, just over an hour's time. She's going to put flesh on the bones of his growth ambitions. We're expecting her to talk about unblocking new infrastructure projects, possibly giving her backing to the expansion of Britain's airports. And we can talk now to an expert in the field, Dame Diane Coyle, the Bennett Professor of Public Policy at the University of Cambridge. Diane, thanks so much for being with us. I know previously you've been critical of using GDP as a measure of economic progress. We've got growth so much at the front of the political conversation at the moment. Partly you didn't like it because it doesn't account for the environmental impact. When we're talking about Heathrow, for example, if the government wants growth, doesn't it need to forget about net zero?
No, I don't think it's a completely zero-sum game as that trade-off implies. There will be some, and I think Heathrow is a good example of that. But there are plenty of ways to have growth that takes account of the environment, air pollution, and so on. And not everything can be done with the same instruments. So there are lots of other things going on that will help deliver net zero.
But can we really have an AI boom fast without following Donald Trump's lead when it comes to, the drill, baby, drill approach and using fossil fuels to power data centers, for example?
Well, we've already seen that technological innovation in AI is so rapid that it's going to be possible to have models that work without using the energy and water in the same way. Obviously any economic activity is going to use natural resources. So my point about GDP is that it does matter, but it's not the only thing that matters, and you need to be aware of all of the environmental impacts as well. But there will be choices to be made. We've had pretty flat growth for many, many years in this country. People's living standards haven't been going up. We're lagging behind other countries. So I think the emphasis on growth is absolutely right.
Diane, good morning. I'm interested to see the Prime Minister writing in the Times this morning and channeling Margaret Thatcher, saying a change in the economic weather can only ever come from a supply-side expansion of the nation's productive power. In the 80s, the Thatcher government deregulated finance. He talks about globalization under the last Labour government and says this is our equivalent. Just in terms of our expectation about the supply-side plans that he has, are there shifts we can expect on that scale?
Well, if you do things that affect the supply side, it takes a long time to have an impact, but the impact is large, and the right time to start is now. But I think the idea that this is going to be quick and easy is a little bit dangerous. Things like building infrastructure, once you start, that immediately contributes to economic growth because of the activity. But the longer term effects will be slow because these projects are large, takes a long time. A lot of things have to get coordinated, the private utilities as well as public investment and so on. And it's equally the idea that there's some easy bonfire of regulations to happen that will unleash growth is a myth, and it's been tried before. There are plenty of detailed regulations which might be hindering particular parts of economic expansion. But it's not that the whole lot. And in fact, clear, well-enforced regulations actually help economic growth. They create certainty for business. So I think it's the right emphasis. But my job as an economist is to say, actually, it's a bit complicated and inject some doses of reality.
Right. Okay, so it is a bit complicated. We don't expect results very quickly. But is leaning into the Oxford and Cambridge arc, is that a move in the right direction? Diane, clearly that will be politically complicated because there's a lot of expectation that growth is perhaps more spread, or wealth is perhaps more spread from his base. But is that going to be something that will deliver more quickly than investment elsewhere?
Well, I think the things that will deliver more quickly are projects like the Oxford-Cambridge arc that have actually been around as an idea for quite a long time. There are other spots in the country where you can see the possibility of unlocking growth relatively quickly. Another one, for example, would be Northern Rail and creating a single job market across those northern English cities and improving the infrastructure there. There'll be several of those around the country. I'm sitting in Cambridge. That's another one where clearly there's more potential for growth in life sciences and AI, but it needs housing, it needs infrastructure. So the government's role in coordinating all of the people who need to come together in these kinds of areas, it's absolutely the right way to go.
Professor, good morning. Where is the UK's comparative advantage right now?
Do you mean in terms of sectors of the economy or areas?
Yeah, sectors. Where should we be leaning into? We've talked about Oxford and Cambridge. We've talked about life sciences. AI is another area. Where is our comparative advantage? Where should we be focusing our attention right now that is going to deliver the UK's kind of unique selling points?
Well, I think those are pretty obvious, and this government has named them, and many previous industrial strategies have named them as well. You just did yourself. Life sciences is one. The creative industries is another. 67% of UK GDP really needs the government leaning into that. Financial services. So there are long-standing comparative advantages. And the trick is getting the coordination across different bits of government policy and across the private sector that will unlock growth in those areas where we know we have an advantage. And that includes trade talks as well and an export deal with the EU.
So I'm just trying to understand what the potential is here. We have these comparative advantages. We have some really key sectors that are really important on the global stage right now. We haven't taken advantage of them. There is that potential that exists there. How kind of underperforming are these sectors right now relative to where they could be if we deliver the kind of right infrastructure, the right connections for these sectors to prosper? How kind of underclubbed are they at the moment?
Well, I think quite a lot. If you look at the UK compared to comparator countries, we have underinvested, including in some of these leading sectors. And so there's no mystery really about the things that have been holding back potential growth. It is the obvious things like not being able to build, the impact of Brexit on trade, skill shortages. These are well known. I think the real challenge is getting that coordination across all of the different bits of government, national and local, and the private sector who need to coordinate to unlock that potential that you're just talking about.
Diane, thanks for spending some time with us this morning. It's going to be fascinating to see what the Chancellor delivers a little bit later on. Diane, go on. the Bennett Professor of Public Policy at the University of Cambridge. 10 a.m. is Rachel Reeves' speech. We're not too far away from that. 2:45, we get a Canadian rate decision. That's going to be fascinating. It is, of course, followed by a Fed rate decision. 7:30 p.m. this evening. This is London time, Jay Powell's press conference. After market, we get Tesla, we get Microsoft, and we get Meta earnings. I'm going to throw in the Champions League just for Anna as well. That's coming up a little bit later. But let's focus on the Fed and figure out what is going to be happening there. What are we really going to get out of this? Eileen Oyemada joins us now. She leads Bloomberg's coverage of FX and rates here in Europe. Expectations for the decision. There aren't really any real expectations for the decision, but what are we going to learn today about what happens maybe in March?
Yeah, exactly. What the market wants to know is how the Fed is looking at the early days of Trump's administration. Obviously, officials and Powell specifically will be very careful in crafting their message because they have to react to actual policy rather than news reports on as much as they moved markets a lot these days. But what we are seeing investors focusing on is whether the Powell will keep the door open for a March rate cut. Currently, markets pricing a 30% chance of that happening, and if he signals any deterioration in the labor market or talks about how inflation really was more benign at the start of the year, that could be seen as from investors as a dovish message.
Yeah, I think it's really interesting thinking about how the different central banks are dealing with the new administration in the US. We heard from the Riksbank earlier talking about particular uncertainty about developments abroad, which you can imagine they are perhaps thinking, at least in part, about what's going on in the US. And then I'm just looking at expectations around the Bank of Canada because we expect a rate decision there as well. And they're actually expected to set out to reveal projections of what to expect if Trump imposes the levies that he's talked about on February the 1st. And he only mentioned that because that's not enacted policy either. And yet here we have central banks setting out what they think in detail this is going to do to their economy. And yet it'll be kind of strange if the Fed says almost nothing.
Yeah, absolutely. I think, like you said, each central bank has its own approach to how to deal with the news. The Fed tends to lean on the more careful side, but obviously that will be the main focus point on the presser, and Powell will definitely have to address it. Let's remember the last time in the minutes from the December meeting, we had some hints that policymakers took into account what they expected from Trump's policies in their forecast.
Yeah, so it's sort of like left up to individual policymakers. Exactly. Some include it and some don't, just whatever they felt like.
But exactly. If the meetings are dud and the presses are void, doesn't that just leave Trump's posts on X to move the market?
Yeah, absolutely. That's a risk, I think. We expect him to be commenting on it live, so that could happen. I don't think Powell will ignore it completely, but he may craft his message along the lines of, we will react to how his policies change the data. We will remain data dependent and keep the door open to changes in their policy, like not committing to a specific path. Pretty much what he has done in December.
Okay, Bloomberg's Eileen Oyemada, great to have you with us. Thank you.
ECB tomorrow as well. Let's not forget that. I've got a great conversation coming up for you. The Norges Bank Investment Management CEO is going to be joining us very, very shortly. Nikolai Tangen out on surveillance, 12 p.m. noontime London. I think they did 13%. 12-13%. I think it was 13% last year in terms of their rate of return. That's not bad. What does this year look like? More volatile, maybe?
Yes, big holdings in tech, of course, this business. And so as a result of that, I'm sure they're really interested in what DeepSeek is doing and what it might do to the cost of employing AI and indeed what all of these big US corporates in the tech space have to say today when they report earnings.
Yeah, indeed. Well, we await those earnings, but we are looking at ASML holding its gains higher, nearly 11% still, and that is boosting the stock 600 up 0.4% still, the AEX up 1.15%. But Guy, you keep raining on the parade.
I do. Look at that chart. That chart rains on the parade. Look, there you go. We are still on a 5-day basis.
No more rain required.
In negative territory. It's sunny today out there. We'll just take the sunshine for the time being. Enjoy the rest of the day. It's buckle up day, kind of a day. Lots going on. The Fed firmly in focus. Earnings too. Look at London. We're sunny. This is Bloomberg.
at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg learns Microsoft and OpenAI are investigating whether a group linked to a Chinese startup, DeepSeek, obtained an OpenAI data without authorization. ASML surges as fourth quarter orders smash estimates with the AI boom driving demand for its chip-making machines. Plus, focus turns to the Fed, which is set to leave rates steady as it braces for the impact of Donald Trump's policies. Now, later this hour, we also discuss the Trump administration and what it means for energy and commodities with the one and only Jeff Curry from Carlisle. Now, first thing is first, let's take a look at the European markets map. Again, there's quite a lot of anxiousness as we get into earnings season about the future tech valuations. We also have the Fed a little bit later on, and of course, we have a lot of earnings from the Magnificent Seven. So we have a number of opinion pieces that I urge everyone to go and check out, giving us an idea of where they expect valuations to be in the next couple of quarters. The CAC 40 down 0.5%. This is really dragged lower also by LVMH. The stock price being hurt a lot as they disappointed on earnings. The DAX gaining some 0.2%. Now, it's also a really interesting story, not only when it comes to oil, but the U.S. 10-year yield ahead of the Fed. You can see that 10-year yield for 5.162. Remember, when we spoke to Larry Fink in Davos, he said 5% is not out of the realm of possibility, and the S&P futures practically unchanged. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in just a moment, we'll discuss the markets ahead, of course, of the Fed decision later today with Ursula Marchioni from BlackRock. But let's also start with the tech story that's really been dominating the agenda. Now, after ASML's big earnings beat, we'll explore what's next for AI chip making. But first, a Bloomberg scoop and the latest on DeepSeek. We understand that Microsoft and OpenAI are investigating whether the Chinese AI startup actually obtained unauthorized data output from OpenAI technology. Now, for more, we're joined by Mark Bergen, Bloomberg's EMEA tech editor. So, Mark and Ursula, thank you both. I mean, this, again, feels like a big deal, not quite the earthquake that we saw a couple of days ago. I mean, what does this mean? What does this probe actually look into?
Yeah, it's a rumbling for a potential earthquake, which would be if Microsoft and OpenAI came out and actually said, in fact, we found evidence that DeepSeek, kind of what the term here is distillation. It's effectively like kind of going and accessing the the OpenAI API and basically scraping a lot more data than OpenAI allows, and effectively like building the model off the backs of OpenAI's model. And so that's been circulating the past few days, circulating in Silicon Valley and tech circles saying, listen, some people were impressed with DeepSeek. It's definitely an impressive model, but there's maybe some evidence or certainly some speculation that they were standing on the shoulders of someone else.
But I mean, does it matter at the end of the day? I mean, if this is a new model that they can use cheaper chips and this floods the market, I mean, there's also news that Alibaba is talking about, doing something similar. Does the lawsuit actually change anything?
I think it undercuts the thesis of, and the market's response was, here was this startup that was able to build something on par with OpenAI with much less, on a shoestring budget, without using the latest GPUs. There's some evidence that, in fact, they had a big head start by taking some of the data from OpenAI. That really kind of undercuts that thesis. Now, you mentioned Alibaba. As far as I know, there's no evidence that, or even suggestion that Alibaba's done the same thing. But they're obviously a much more well-capitalized company. In some ways, we would expect if a model came out of China, it's going to be Alibaba, Tencent, or ByteDance, so a little less surprising.
Really, it's one of the most incredible stories that we've been following. Talk to me about ASLM. So they beat earnings, and I guess it also gives a bit of hope to the tech sector.
Yeah, there's certainly some reassurance. I think from what I saw this morning, that kind of rebounds and their shares are kind of erased the losses that they had for the past 2 days. Didn't see any evidence immediately. I mean, let's be clear, though, ASML sells this $300 million device that is critical to making these chips, but it's not like orders are going to stop on a dime for the company. So I don't think there's an expectation that we're going to see it today. They didn't, as far as I know, the CEO didn't address it in the comments, so they're certainly not, talking about this being a critical change in their strategy and their direction. But certainly some reassurance. We've seen that kind of some of the suppliers for NVIDIA also in Japan came out and made similar comments saying, so far we haven't seen any change on our orders or anything drastic that's sort of the market reverberations from Monday would suggest.
Mark, thank you so much for joining us. Bloomberg's EMEA tech editor, Mark Bergen. Now let's dive deeper into the markets with Ursula Marchionni, head of EMEA Investment and Portfolio Solutions at BlackRock. Ursula, thank you for joining us. Frankly, there's a lot, right? There's the policies, there's the Trump tariffs, there's trying to understand what happens with AI, and then we're in the middle of earnings season. And the Fed. So if you look at all of these, what do you think will weigh more on investors' minds?
It is an eventful week, for sure, and thank you for having me, Francine. So maybe following on, looking at the equity markets to begin with, because that's how we began the week. We have a theme for our 2025 outlook, which is focus on the US with selectivity elsewhere. And I think that we very much hold on to that for now. The thesis about US exceptionalism is founded on 3 arrows: strong economic growth, although married with sticky inflation, strong earnings, very high bar, but thus far has been met, and we'll see how the week develops tonight and tomorrow. And then 3, technology and leadership there. So the rambling this week is really around that third component, and more specifically, chip makers and power. So again, I would say until a potential threat spreads across those 3 pillars, we can continue to hold on. I think from an European perspective as well, we've seen a lot of clients towards the end of last year moving equity benchmarks from MSCI Europe to World, and so there's also structural demand for the US. So for me, it's really not necessarily around if, but how. So this week is really informative in terms of looking at the potential benefits of blending top 20 and S&P equal weight. We've seen 70% of the S&P going up actually on Monday, apart from the Max 7, and then coming down yesterday. So the decoupling somehow of those 2 blocks is important, and so having granularity to play it, I think, is the way forward there.
Ursula, I mean, there's also a lot of talk, of course, about what the Fed does next. We've seen a lot of volatility just 3 weeks ago because of that, also infecting, for example, UK gilts. When you have these bouts of volatility, do you try and stay the course?
Yes, so it's interesting, and you referenced the UK, and there is really a global phenomenon that got exacerbated there, in terms of sentiment and thin liquidity. I think taking a step back, if we look at today, tomorrow, we expect the Fed to keep rates steady, provide limited guidance forward-looking. On the ECB, we align with consensus 25 bips, and then probably back-to-back cuts into the mid of the year. However, whatever happens after that in Europe is slightly more up for debate. You mentioned tariffs. There's going to be a lot of attention to potential trade frictions. Zooming out, we're looking at a year end where we have a clear central bank divergence, call it a 4% stateside, 175 here. So again, to your point, how do we put that into portfolios? Another key theme for us is quality with carry with quality, actually. And so I think that we prefer quality spread vis-a-vis duration because of that US view. At the same time, in Europe, there's opportunity for rates, and we also like that carry element in terms of euro high yield. So there's a lot to do in fixed income as well, but I agree with you. It goes back to the volatility and using nimble instruments to implement.
But when there's a bout of volatility, is it a good time to get in? Or is it better to wait it out? Because there's so many competing forces, and frankly, it's unclear whether Donald Trump wants a lower dollar or he's okay with a high dollar. And that will change everything in terms of the policies he puts in place.
I agree. I think we need to continue to stick to the North Star. So I've articulated our core views. Again, every investor, depending on their portfolio, will have theirs and stay the course there. At the same time, the opportunity set in terms of tools that can be used and the granularity, the greater granularity that we have in terms of instruments provides opportunities for tactically capturing alpha, which I think should be embraced. And so it's a bit of both worlds. Europe is another great example here. Very much a contrarian view for now, but we've started to see some clients warming up. We saw nearly 3 billion in ETP inflows year to date, which is a big difference vis-a-vis before. So I think loads of elements for us to continue to monitor at tactical level while staying the course on a strategic asset allocation front.
And Ursa, in terms of Europe, is it certain industry groups that you think will perform the best? Luxury has gotten slamming, that it was going to be the big thing that actually maybe outperformed, and then yesterday got shot down. So again, it's very difficult to read if it's tied to the Chinese economy.
It is difficult to read, which is why selectivity, embracing active opportunities is still the way to go in our view. But what I hear from investors around Europe is really twofold. On one side, potential stabilization of politics at single country level, coupled with potential, resolution of geopolitical tensions looking east in the bloc. And then two, on the earnings front, you're right, we don't see the strength that we observe in the US. At the same time, the bar is lower, and so opportunities for potential upside surprises might come up. So again, still a contrarian view, but in that sense, one worth watching.
Is there anything at the moment that actually you really want to stay actively away from?
Actively away from? That's an interesting question. The point that you mentioned in terms of the level of uncertainty, tariffs, but also regulation is clearly elevated. And so there will be areas where, I think on a relative basis, when you see clear opportunities, they probably aren't worth taking the risk.
Your take overall on China, again, it's unreadable, also given the policies from Donald Trump that, tariffs, but maybe will be lighter, maybe not. Does that get ramped up with some of this deep-seek AI, or do you see tensions go down and therefore leading to opportunities in markets?
I don't see a lot of interest from clients in actually testing that thesis. So I agree with you that there's a lot of attention. Obviously, Lunar New Year, what is going to happen when we come back? Is there going to be some policy support that gets announced? Could that be a catalyst? There's a lot of debate around all those themes. But in terms of people moving money, if I look at data, it seems to me that clients are concentrating on the calls where they have conviction and then buying time to observe how to further diversify into potential other areas.
Ursula, thank you so much for joining us on probably one of the busiest weeks, maybe. Let's see let's see what next week actually brings us. Ursula Marchioni, head of EMEA Investment and Portfolio Solutions at BlackRock. Now, coming up, we'll also be live on the ground at the EPEM Private Equity Conference in Cannes to discuss the outlook for the industry amid 2025's headwinds. That conversation next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
After a slow start in 2024, alternative asset managers are finally starting to see some success with Europe's wealthy by offering something investors crave, and that's better liquidity. Well, the prize is a potential $10 trillion opportunity to be tapped from Europe's high net worth individuals. Now, at this week's EPAM conference, participants are debating how best to leverage a region that's home to almost a third of the world's millionaires. Let's bring in Bloomberg's Kriti Gupta, who's at the conference in Cannes. Hi, Kriti.
Hi, Fran. Thank you so much. Yeah, we're right here in Cannes. I've got the best assignment. We're in the best spot. And we're talking about everyone's favorite subject, which is, of course, wealth, how you get it, how you distribute it. I've got the perfect guest to talk about that. I'm joined now by Apollo's Veronique Fournier, the head of Apollo's global wealth business, valued about $30 billion in terms of assets under management. This is a really important time to have her. Thank you so much for joining the program here. It's fascinating because there's so many things to talk about, but I just want to go big picture here. You have a really interesting title, Head of Wealth. What does that mean right now? What are people talking about in the wealth space?
Yeah, great. Well, thanks for having me. I think as an organization, we've been in private markets for very many years, but typically have had, most of our clients coming from the institutional space. And it really has been a great development in the industry to have seen also wealth investors now looking to have access to the great solutions that you can find in private markets. So really, we're trying to help private investors get access to opportunities that they haven't been able to get access to before. And that's really trying to give them, better diversification in their portfolios and moving away from those, traditional days where alternatives used to be a very small niche pocket of your portfolio to something where, we see potentially wealth investors having allocations up to 50% in private markets.
That was the case that was made, with the public markets back in the day with the stock market, right? That you get a share of a company so that you are part of that wealth creation story. Is that kind of extent of democratization, I'm going to say that word right, kind of what you're starting to see in the private markets? Are we there yet?
Well, I think what we are starting to see is a recognition that, there used to be a world where, public companies, there were 8,000 public companies in the U.S., is now only half of that, 4,000, where the great majority of large companies are actually sitting in the private world. And to be able to access those types of opportunities or investments, the market is recognizing is really important. And so we are seeing many wealth distributors, so whether that's private banks or wealth managers, platforms, etc., all coming to the market and asking to have better access to these types of opportunities as we talked about. And certainly some have talked about that being the democratizations of alternatives. And certainly that's a big theme and one that we're talking about here today in Cannes.
Yeah, it's a fascinating one. We're right here in Cannes, a beautiful landscape. Things feel quite literally sunny, but metaphorically sunny as well. Yet there is kind of this almost overhang when it comes to French politics and the kind of marriage of that and the effect of that when it comes to the financial markets and specifically in the private markets. How do you view this kind of democratization agenda or goal in the context of a fairly rough regulatory environment, at least when it comes to broader Europe?
Well, I think the regulator has, like many investors, recognized that there is great benefit for investors to have access to these opportunities in private markets. When you look at their traditional portfolios, a 60-40 portfolio, investors have typically had exposure to public fixed income, public equities, and haven't really been able to access these private opportunities. The regulator, I think, is recognizing that if investors are going to be investing for a long term, why should they be in daily liquid mutual funds? Why should they be obliged to have 100% liquidity? And so I think there is, from regulators, and in particular here in France, we've seen a regulator that has been very supportive of that trend to enable investors to access these opportunities, certainly when they're investing for a longer term.
Well, certainly interesting time to talk about deregulation in France, giving a little bit of catch-up as well to the States. Let's talk about the other theme that I think is dominating, certainly the public markets, perhaps a little bit spill over to the private markets, is the market turmoil we saw on Monday with this kind of AI story, this collapse in the cost of innovation, maybe more accessible, not just from the mega players of the US, but perhaps from the rest of the world as well. How does that show up in your space?
Yeah, I mean, we've been talking for a while about the concentration in public equity markets, potentially an environment of higher for longer, and what that means for investors who are solely allocated to public markets. And really the big theme that we see is the need for diversification. And so we talked about that already in terms of in a fixed income portfolio where traditionally investors would have had only public exposure, with the same thing on equity, is replacing some of those fixed income allocations or public equity allocations and integrating some private, whether that be high yield, whether that be investment grade. We have a diversified private market strategy that we have run for our own balance sheet for many years that we opened up to investors as an equity replacement, and we're seeing a lot of interest in those types of strategies. Yeah.
So how does the volatility that you see in the public markets show up in some of those private markets, or is it maybe an incentive then to get into the private markets to escape the turmoil of say, a 17% drop in NVIDIA?
Yeah, exactly. So I think that's what we have seen is the need to step away from sort of those more volatile markets. And certainly as we saw that, in 2022 when there was no hiding place and people experienced high correlations in their portfolios, the big driver has been trying to step away from potentially liquid markets to reduce some of that volatility, dampen some of that volatility. And we think the promise of private markets should be, excess return per unit of risk. And then certainly I think that's what's driving a lot of the demand right now.
Yeah, the stars perhaps aligning. Veronique, always a pleasure to see you. Thank you so much for joining me right here in Cannes. Veronique Fournier there, the head of wealth over at Apollo, talking there about, well, maybe the turmoil of Monday is just yet another example of one, Fran, the need to deregulate, and two, the need to diversify via markets that maybe weren't as liquid and weren't as accessible just a couple of years ago. That's the case being made at Apollo right here in sunny Cannes.
Kriti, thanks so much. Great interview, Kriti Gupta in Cannes. Much more to come, and this is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The issue is that we need to understand that bigger banks can provide better services at lower cost. And we do understand that issue of scale. If people go to big supermarkets, why? Because they have wider offers at lower prices. It's the same with banking. If we have bigger banks operating cross-border, it will be to the benefit of all clients.
Well, that was Maria Luisa Albuquerque, the EU's Financial Services Commissioner, speaking exclusively to Bloomberg's Ollie Crook. Now, Bloomberg has also learned that Apple has been secretly working with SpaceX and T-Mobile US to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update, released this week, now supports the technology. Now, the initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile have previously said they plan to expand into data connections and voice calls in the future. Coming up, Jeff Curry from Carlisle on his outlook for the energy and commodities markets. That conversation is up next, and this is Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Bloomberg learns that Microsoft and OpenAI are investigating whether a group linked to a Chinese startup, DeepSeek, obtained OpenAI data without permission. ASML surges as fourth quarter orders smash estimates, with the AI boom driving demand for its chip-making machines. Plus, focus turns to the Fed, which is set to leave rates steady as it braces for the impact of Donald Trump's policy. Now, a federal judge has temporarily blocked the Trump administration from enforcing a directive to halt the payment of federal grants and loans. The president's surprise move, which is meant to ensure that government agencies are aligned with the agenda of Make America Great Again, sparked panic in Washington, with many local officials across the country, while the White House defended the new measures.
Again, I would say this is not a ban. This is a temporary pause and a freeze to ensure that all of the money going out from Washington, D.C. is aligned with the president's agenda. And as the Office of Management and Budget has updates on what will be kickstarted once again, I will provide those to you.
I mean, the new press secretary, I have to say, was really quite tested on that yesterday. It's the first time we heard from her. Now, for more, let's bring in our EMEA news director, Roz Matheson. Roz, when you look at, I mean, it feels like after a lot of policy talk, of tariff talks, the Trump administration is looking more inwards in terms of what they can do for spending freeze and more domestically. What did you learn in the last 24 hours?
Well, it all reflects this very busy effort in the early days of the Trump administration to do a lot. There's been a blizzard of executive orders, be they domestic related or internationally related, about the border, obviously, issues around migration now we see on spending, but also a lot of activity overseas as well, threats of tariffs, a lot of fanning out by Trump administration officials overseas already. But interestingly, what this shows us in all of this blizzard and this effort to do stuff quickly, there can be unintended consequences. And this announcement of this freeze, as you say, did cause quite a bit of panic yesterday, because they had to clarify very quickly this did not affect things like Medicaid, social spending, rental assistance, urgent payments to individual Americans. But even though they clarified that, some states were reporting difficulties accessing those portals. Some of those payments did seem to gum up immediately, and we could see more of that today. So in doing these very broad directives, and that's what a lot of these executive orders and other things have been from the White House, when you do something very big and broad like that, you can have these knock-on effects, and that's probably an early lesson for the Trump administration. It's also a question of just the level of executive power here, because a lot of the fiscal stuff, I mean, stuff around budgets, really generally resides with Congress? And are you going to see Republican lawmakers as well as Democrats, I mean, not Democrats obviously, but Republican lawmakers be comfortable about that, about ceding in a way some of the legislative control of the purse strings to the executive for Donald Trump to be able to make these kinds of blanket announcements? That will be interesting to see just how many Republicans are quite comfortable with that or not.
Yeah, and we've heard many also, press reports on the fact that this hurts research, including some of the tech and AI projects that could be in limbo. We also heard from the president that he's offering buyouts to workers who don't want to return to the office. This feels quite significant, Roz.
Well, that's right. About 10% of the government workforce, these agencies are permanently work from home. And that can be for a variety of reasons. That can be because of the physical inability to get to an office, and many others work partially from home. And what he's saying is, if you don't want to be in the entire time, we'll pay you out if you want to go now. This obviously doesn't affect the military, it doesn't affect postal workers and others, but it's really in line again with this agenda of bringing workers back into the office, and very much something that Elon Musk was big on at his own companies. He famously issued his own edicts to his employees to get into the office or be fired. And we saw that that didn't necessarily go according to plan, because we saw some people were fired or left, and then they had to bring them back because they lost so much core expertise in those departures. So the question is, how successful would this be? Are there ramifications from it? We know that some of these areas are quite unionized. You can imagine this will get tied up very, very quickly in legal measures to try and stop it. But it does, again, reflect that effort, that broad effort to reframe the entire government, agency by agency. We saw very quickly Donald Trump moving to get rid of some inspector generals. He's withdrawing security support for some former Democrat officials in the Biden administration and so on. So he's really trying to reshape the whole architecture of government to his priorities, and that includes these federal agencies.
Roz, thank you so much. Roz Matheson there, our EMEA News Director, of course, talking about Trump and what we found out this week. Now, President Trump has also threatened widespread tariffs on sectors including steel, copper, and aluminium that could reshape U.S. supply chains. Now, commodity traders are also keeping a very close eye on what his administration could mean for energy prices, saying he wants drill, baby, drill. Let's bring in Jeff Curry, Chief Strategy Officer of Energy Pathways at Carlyle. Jeff, as always, thank you so much for joining us. I have a lot of questions on Russia, on drilling in the U.S., but maybe let's start with what we heard last week, which was the president really reaching out and calling for OPEC to lower oil prices. Will they oblige?
Well, they're planning on increasing output in April of this year. And I think we have to put that increase in the context of sanctions and potential tariffs in Canada. And that's what the market's focused on in the very near term. Sanctions have already taken out anywhere from 1 million to 1.5 million barrels per day of Iranian and Russian crude. It's probably there's some redirection going on, but you're losing oil. You can see it in the time spreads on the oil market. And then the big question is Canadian tariffs. I don't think they could do it because it would be so explosive to, as you point out, supply chains in the U.S. and gasoline in particular. But between all of those events, more than enough room for OPEC to bring on that supply come April.
Yeah, so Jeff, so again, there were many questions on whether, the new sanctions on Russia really affected supplies. You say yes, undoubtedly.
Yeah, let's say, like the banks are saying 1 million barrels per day on Russia. The trade houses are saying 250. I'm giving you 500. By the bottom line, these ships are not going into those ports in India and China. Where they're going and where they're sitting, I don't want to get in that debate. No. The bottom line is you're not, but more importantly, by the time you get to 2Q, you have deficits in this market. And you get in 2Q, you have counter seasonal deficits. There's room for those barrels.
Does Donald Trump have a figure of what he wants oil to be?
If you go back to the last time he showed his hand on that was 2018 in a tweet of $75 a barrel. Clearly he may think it's,
He read the Courier report.
Yeah. But I think the key issue is, can he do a lot about it? Just like, he got out of control in 18 and went up to nearly $90 a barrel. And when we think about the current environment, he says he wants drill, baby, drill. Regulation is not a constraint on U.S. production. Capital budgets are there. And, the CEOs in U.S. oil companies said, hey, we're not going to change our policy right now. And I think the key issue is you look at U.S. production, slowing down. The growth is just not there.
But why? This is because of demand or just the price? I mean,
price.
The price. If they don't get
the geology on the oil versus gas, you're getting more gas, more liquids than you are oil anymore. So the ability to grow oil. I like to point out, you're at 13 million barrels per day at the eve of COVID. You're at 13.2. Yeah, you went down to like 10 and 5 and back up, but you're not much higher than where you were in 2019. Which shows you it's difficult to grow.
I find it incredible, and you reminded me, we have this, I see you more than once a year, but this is like our annual January catch-up, and it's incredible, like the price of oil is basically range-bound, right? It goes up and down, but broadly, it hasn't changed that much. Is this year going to be any different?
It's over 30 months now it's been that way. That's really, and actually there's only one other period it's been this long. It was late 2012 to mid-2014. We were at, I remember one piece I wrote, we just finished the year at $110.23 and started at $110.24. It's kind of the same. We're at 80, and change basically right now. What was the setup then versus the setup now? Exact same. The difference is China was America, America was China. 2012, 2013, you had a very weak Europe, an anemic U.S., and a robust China. We have a very weak Europe, an anemic China, and a very robust U.S. You can't get out of that trap. We went out of the trap to the downside because of a supply event. By the way, the one commodity that did move over that time period, gold went down. What happened over that time, last 2 years, gold has gone up. It's up $1,000 an ounce.
That's diversification,
Diversification.
Isn't it?
And I think the other thing, too, about this, it'll be a supply event that gets us out of it. The supply event, I'd argue, is teeing up the other direction for less supply, not more supply.
Okay, so what happens in April when basically OPEC, restarts production? Does the price of oil move, or are there going to be different factions?
I would tend to think the oil's going to move sooner rather than later on that. The bottom line, these markets are getting tight. This time spreads on oil are telling you are very tight right now. Inventories right now are record low everywhere in the world. I've been doing this a long time. I've not seen inventories this low. A lot of it's destocking because you don't want to hold the inventory with high cost of capital. But there's also the fact that the supply is not readily available. The backwardation on Brent right now is an indication we are short oil. And when we go into late 1Q, get into late Feb, March, demand starts to pick back up again, and the seasonality could start to put a lot of pressure on the system. So I would tend to think we move sooner rather than later.
But Jeff, have financial investors permanently lost interest in oil?
Well, I go back. The answer to that, right now, it's going to take a huge hurdle to get them back.
Right.
And I think part of it is it's a very volatile market. Even though you're pointed, we stayed flat over that time period. It was like an EKG over that time period. 92, high 60s.
People are hiding under their desks.
Yeah, exactly.
Yeah.
And I don't even want to comment on the price right now. I'd rather do other things. But the reality is that discourages the investment, and then that discourages investment in the ground. It just compounds the problem and makes it worse as we look out further. But I think that's a really key point, is the investors are absent. And so any move has to be, you have to drive over the pothole for it to move. And are we going to drive over the pothole before OPEC raises production in April? Also by the time they raise production and the market starts to rebalance, it's going to take time. It's like turning a super tanker. You just don't immediately go there.
Okay, Jeff, stay around because we talk energy, AI, and data centers. This is like the hot topic du jour, so I want to get your thoughts on, of course, how much energy is needed and where that energy comes from. That's next, and this is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back, everyone. Now, still with us, Jeff Curry, Chief Strategy Officer at Energy Pathways at Carlyle. Jeff, thank you so much for sticking around. There's been so much excitement about DeepSeek and what it means, of course, for tech AI. How does this play out in the energy markets?
I think the key point here, we haven't seen the AI demand for energy yet. All we have seen is the data center demand driven by crypto and by cloud computing. So that's yet to come. And I was joking. In fact, 2 years ago, we'd be on here talking about, complaining about the crypto demand, creating a carbon footprint for no productive reasons. Bottom line, when people talk about data center demand, they're talking about crypto miners right now, particularly given current prices. So when we think about the impact AI is going to have, particularly on data center demand, that's something that's still yet to come.
But, Jack, can you give us a size and scope of how much more energy we need? Because the number of data centers that we're talking about and energy consumption is huge, and I just don't know how we'll deal with it.
Okay, let's put power demand in perspective relative to the rest of the energy. Power is about 20% of global energy, so it's not that big to begin with. Yeah. And then we take the growth in AI in the U.S. We're talking about 5% growth overall. Power demand in the U.S. is running around 1.7, and so you hear these numbers. Oh, it's going to be the size of Japan. It's already the size of Italy. This digitalization, not data centers. I just call it digitalization. This has been going on for 20 years. It's a straight line going up, and it's going to be a straight line continuing to going up, and it's going to. All you need is 2 to 3% growth in power demand in Europe and the U.S., and you got a problem. Because we have not been investing in the grid.
Yeah.
So we've seen a lot of investment in things like renewables, where you've displaced old power generation sources, but the overall grid and the ability to grow, it's not there. So even 2 to 3% type of growth in power demand is enough to start to create serious problems.
But so we have a problem.
Yes, we definitely have a problem.
Is there a way where you don't foresee us having a problem? If
no,
it's nuclear, or is there some kind of option?
When I think about the three key things you want to watch in commodity markets in 2025, fragility of supply chains is right up the top, followed by low inventories, and then followed by the dollar. So those are the three things. But the fragility of the supply chains, and I want to go over the Dunkelflaute in Germany this last winter, which is it means no wind, no sun, and really cold out. Power prices went to €1,000 a megawatt hour because you couldn't deliver. And the thing we've learned about with renewables, it's turned the supply curve upside down. You can deliver them when you can produce them. You can't deliver them when you need them. And the market couldn't deliver the power. And also, we don't have a grid that's capable of meeting that excess demand. So supply chain fragility, not just in oil, or in power and gas. You see it in oil and refining and the rest of the energy supply chain. And I don't think that's changing.
But Jeff, and you've talked on the show before about, of course, the fact that copper is also needed to build some of the renewables. Now we have a rollback from the U.S. on renewables. So is this the perfect storm? And again, how should heads of state think about this?
Changing those regulatory and the mandates around this is not going to have an impact globally. Energy transition has been with us for 50 years. The late President Carter was the first one to use the term in the 70s. Nixon implemented the energy transition in 1973 with his Project Independence. And so here's the irony of it. We saw energy transition was driven by the fear of running out of oil up until around 2015 with the big shale boom. Then around 2015 with the Paris Agreement, it turned into the fear of too much oil. And so we went from peak supply, or peak oil meaning peak supply, to peak oil meaning peak demand. Now let's compare the energy transition pace under the energy security or national security. It was 0.5% per year. It beat the net zero 2050 goals. So if we move energy transition to being driven by energy security and national concerns like it was in the 70s, with nuclear, it's probably going to go faster under that case than it did under the net zero 2050. So again, I think the key point here, this is not new. It's been with us, and it's just going to change the motivation. I guess the energy transition is in its own transition, but it's not going away.
I mean, in Europe, it feels so slow.
Mm-hmm.
Is Europe at a natural disadvantage compared to the U.S.?
Actually, Europe has just been charging ahead. Going back to the 70s, the French led the way in nuclear power back in the 70s under the Messer Plan. That's not changing as in this current environment, because what is the focus? Man, Europe's going to take a while, but in places like the U.S. and the installation of nuclear power in places like China is just off the charts. So, I would say the motivation is going to change. But the direction of travel, it's the same. And we've been on that highway for 50 years, and I don't see it changing.
Jeff, you wrote this great newsletter. Actually, what does this all mean for investors? How is it actionable?
We want to be long real assets. Whether they're, in the illiquid private markets, things like natural resources, infrastructure, real estate, but, liquid alts like, managed futures. These are all assets that have been out of favor for 20 years. And I think you can capture it in what's happening with the equity bond correlation. It's flipped on its head. By the way, when those commodities started behaving weirdly in late 22, is when that correlation flipped. The investors left. Why did the investors leave? Cost of capital went up and they couldn't employ the leverage anymore. They're out of there. And you think about, remember the old world of risk on, risk off? That was because at 0% interest rates, you didn't care if it's bonds or equities. You just had liquidity. The question is, how much leverage were you going to apply? And you went into everything at the same time. Now with higher interest rates, you have choices. And what I'm arguing, the choice is going to favor these real assets when we start to feel the pressures of, the underinvestment.
Jeff, as always, thank you so much for joining us. That was Jeff Curry, Chief Strategy Officer at Energy Pathways at Carlyle. Now, coming up, we continue on the markets. Luxury stocks falling after LVMH disappoints, casting doubts on the prospects of a quick recovery in the sector. So we'll have a full lowdown on that next. And this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Now to one of our biggest followers in Europe this morning, LVMH shares slumping after fashion and leather goods sales at the luxury giant fell in the fourth quarter, casting doubt on the prospects for a quick recovery for the sector. Now for more on this, we're joined by Bloomberg Opinion's Andrea Felsted. Andrea, thanks so much for joining us. I mean, I know you look at this day in, day out, trying to see what's doing well and not. LVMH was a bit of a disappointment.
It was fine, but it just didn't outperform in the way that the others did. Richemont really, beat expectations. Even Burberry, it was still negative, but it was nowhere near as negative as expected. And yes, LVMH did slightly better than analyst expectations, but after the bar was raised, that just wasn't good enough.
So is that because who's buying luxury at the moment? Again, we're kind of missing the Chinese market. We're seeing millennials coming back up, but slowly.
It's really the US. All the action has been in the US since the election. We've had stock markets melting up until recently. Bitcoin, there tends to be a correlation with that and US sales. Plus, there seems to have been a sort of a bit of a recovery since the election. Even those that didn't like the result have sort of moved on and been slightly relieved that there wasn't an uncertain outcome, and add that to markets, and that's definitely, we're seeing the US recovering.
And there's all this talk about possibly looking at a breakup for the group. Is that, happy talk? Is that possible?
It is possible, but I'm not sure whether Bernard Arnault would really take an axe to the group he spent 40 years building. But then, he is a businessman, as we've seen, and the valuation seems to be being penalised by it having things like wines and spirits, the duty-free business. So, there is a case that if you concentrate it on pure luxury, so LVMH's PE ratio is about 25 times. Yeah. Hermes is on 55 times. If you can get anywhere near that, you're not going to get to it, but if you can get anywhere near that, then that could potentially unlock value.
Andrea, to tariff or not to tariff, Bernard Arnault was at the inauguration, I guess, to keep the tariffs at bay.
Exactly. And it was really interesting yesterday because he was, really enthusiastic about the US. He said it was going to boom, really scathing about France. He praised the Trump tax cuts. He praised subsidies for manufacturing in the US, whereas in France, companies are taxed. And I think that was a real hint that if we are going to see tariffs, even when we're not going to see tariffs, they could, increase manufacturing in the US. They already manufacture some leather goods in Texas and California. We could see more of that.
Andrea, so interesting. Thanks so much, Andrea Felsted from Bloomberg Opinion. Up next, Bloomberg Brief. Danny Berger and Manus Kreinig in New York. And this is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The first Fed decision of 2025. A pause expected as Powell gears up for a presser with politics on the agenda. Defending U.S. tech exceptionalism. Microsoft and Meta report earnings just days after the DeepSeek challenge. And funding chaos. The Trump freeze on spending is halted for now by a U.S. judge. Good morning, Manus.
Danny, good morning. It's hard to believe we're just 1% off all-time highs. $8 trillion worth of market cap will report today. It's going to be one of the busiest days since 2018. There's a ferocious amount of NVIDIA buying yesterday, but it's still only clawed back 50% of the 19% drop on Monday. Peter Oppenheimer at Goldman's, we spoke to him yesterday, Danny, of course. He said the AI sell-off isn't the start of a bear market. That's triggered by falling profits. It is Fed Day. We're counting down to that, and we go into this Fed, and they're probably quite grateful for all the other noise that they have around the world. Consumer confidence slipping across the board. Yields are down 20 basis points since the middle of January. So you're looking at that move on the bonds, 452. And by the way, the JP Morgan client survey, net longs going into this first quarter are the longest in 15 years.
There you go. That's a good stat for you. Well, we're also keeping our eye on some individual movers. ASML this morning surging the most since 2020. Good news for everyone who's concerned about AI, 7.4% amid a huge earnings beat with strong demand for its chip-making machines.
Plus, LVMH dropping after the sales decline in the fourth quarter, casting doubt on the quick recovery in luxury demand.
Also keeping an eye on Alibaba, rising this morning. The company touting its new AI model that released better benchmark scores than both DeepSeek and Llama from Meta.
And in just a few moments, Jay Foley from Rabobank will join us later in the hour. Setting up for the Fed, it is Andrew Hollenhorst. He joins us then. Danny, I mean, it's a bifurcation, really, between the reporting that comes today and the chaos in Washington. For me, it's two numbers that really matter. It's Meta and Microsoft and the CapEx, $65 billion and $80 billion. Justify yourself.
What matters more for this market? Is it the tech? At least in the short term, it has been tech, right? That's been moving this market. But I can't help but wonder if the policy uncertainty, the chaos we had from that order from Trump, is something that really eats into the economic picture. Remember all the animal spirits that were unleashed, this big market rally we had after the election? That was because of this presumed better growth environment. Manis, I talked to private equity leaders yesterday who basically said some of their deals were shaken because they were unsure of things like health portals, if they'd still get funding. You had concerns over a variety of different things yesterday. Does that put CapEx on hold for different businesses that are affected by federal funding?
Well, look, this whole market was so buoyed up that you were going to have massive exits. We did a private equity interview yesterday, and it's bringing in uncertainty. And the question comes back to much more about, well, what is it that's coming from China? Is it that they are challenging U.S. exceptionalism, or is it just open source versus closed source? And that's probably the rub of the debate.
Yeah, well, to that point, BC Partners' Nikos Stathopoulos, who we spoke to yesterday, said that policy uncertainty could mean that exits go under freeze. One could argue perhaps it's having an impact on consumer confidence as well. We got U.S. consumer confidence numbers yesterday. Look at this. It drops to a 4-month low. A lot of folks citing the labor market as a point of concern. All of this ahead of a Fed decision. Joining us now is Jane Foley, head of FX strategy at Rabobank. Jane, you have consumer confidence waning. Some of the luxury players have started to report worse earnings or a pullback in spending. You have policy uncertainty reigning supreme, especially after yesterday. Have we passed the peak of U.S. growth expectations?
Well, you know, I think that's a very interesting question, but at the same time, all of those factors suggest that the Fed can leave the door open for another interest rate cut, which could potentially sort of offset some of those concerns that you've been mentioning, which is why, of course, today's Fed meeting is really timely. But of course, you know, even last week, you know, the market generally decided, well, okay, so tariffs didn't happen in the first week of Trump's presidency. Again, that also leaves open the potential scope that the Fed can potentially cut interest rates again. So that's why the guidance, I think, from the Fed today is going to be really important. They had suggested at the end of last year that 2 cuts can come today. The market doesn't believe that's going to happen, but at least they may be able to signal that one could still come. And certainly expectations that consumer confidence is flagging, that the labour market is still loosening, certainly suggests that that can still happen.
Jane, the accusation was behind the curve, late to hike, and the accusation was too big a cut in September. How important is it today that Powell openly acknowledges the policy risk that delivers such uncertainty for them, rather than shy away from it?
You know, I think it's going to be very difficult for him. I mean, the guidance will still be very tough because he doesn't really know exactly what's coming, or at least when, in terms of some of Trump's policies. So forward guidance is going to be very complicated for that reason. But, you know, if he looks at the economy as it is today, then certainly there should be some room for him to maintain that they can still cut interest rates. But clearly, by the time we get to March, that could be quite different if we have seen, for instance, quite strong tariffs. So forward guidance is going to be very tricky for him today, as of course is probably the topic that he's going to be asked about, whether or not you know, he would cut interest rates if pressed to do so by the president.
And you can't blame him for having a difficult time issuing forward guidance, Jane. It goes back to what you were saying, this expectation that because we didn't get tariffs on week 1 from Trump, things look a little bit better. Is that misguided? Because we have this environment where unpredictability is a feature of Trump policy, not a bug.
And that's right, and all the more so for the Fed to defend itself as being data dependent. So if the data right now suggests that they can cut interest rates, well, that's what they have to do. It does mean, of course, that they will be more cautious with guidance. It does mean that perhaps they could be very cautious with the timing. But equally, you know, they could be accused again of being too late to move. And so, you know, if the data right now suggests they can cut, well, that's what they've got to go with.
Well, last week he addressed, the President of the United States addressed the global audience at Davos, and he had a very, very clear warning about how Europe is treating them. Let's just remind ourselves.
The EU treats us very, very unfairly, very badly. They have a large tax that we know about, and a VAT tax, and it's a very substantial one. They put tariffs on things that we want to do. We have, you know, hundreds of billions of dollars of deficits with the EU, and nobody's happy with it, and we're going to do something about it, but nobody's happy with it. So I think the EU has to speed up their process.
Well, the euro has rallied since he came to power, up over 1%. How vulnerable is that rally? How foolhardy is it to trust that going into an ECB? And that threat, as yet unknown, from the president?
I do think that the euro is a vulnerable currency. I'm not surprised that we have had, the short covering positioning this year, because the move was so significant towards the end of last year. But if we look at just Eurozone fundamentals, it does seem very likely that tariffs are coming. And yet you look at Germany, it's been struggling for the last couple of years, really to move away from stagnation, a negative growth print again for last year, very little growth on the cards for this year. It's struggling to adjust to the new relationship with China, slow growth in China, its biggest export partner. And then, of course, the energy transition. The energy transition in Europe has been very, very costly. There's a war, of course, in Ukraine. That means more defense budget for most European countries, tight labor markets, all of these issues. And it does suggest that if inflation, in the Eurozone, can be back in the box, can be kept low, is returned to benign, then I think the euro, a weak euro, can potentially help Europe with some of these issues. And I think it's against that backdrop that we have to look at euro-dollar, not just from the dollar side of the equation, but from the euro side as well.
Jane, thank you very much. Salutary warning there. It could be the tail risk they come back to life. Jane Foley at Rabobank. There are other stories trending on your Bloomberg terminal this morning. This is what we got for you. Bloomberg sources say that Apple has been working with SpaceX to add support for the Starlink network in its latest iPhone software. Now, this would provide an alternative to the company's in-house satellite communication service. The feature is currently being tested with T-Mobile, and it allows users to send texts, access emergency services when out of cellular range.
Remy Contro expects full-year sales to fall around 18%, with fewer U.S. customers spending on expensive spirits. But that fall in sales, it was less than analysts had expected. Remy said that U.S. stock levels had improved compared with the second quarter. Online sales as well in Asia and China had grown by more than 10%.
Ozempic has won U.S. approval to treat chronic kidney disease in patients who have type 2 diabetes. Now, this expands the use of the drug, which is already used to treat diabetes and weight loss. Novo Nordisk is also exploring its use in treating other disorders.
Coming up, did DeepSeek tap into OpenAI's tech? Microsoft is probing and think they might have. We're going to have more on the competition next.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
It's Bloomberg Brief. I'm Manus Cranny alongside Danny Bogut here in New York. US AI firms playing defense amid DeepSeek's rise. Microsoft and OpenAI are said to be investigating whether DeepSeek obtained unauthorized data output from OpenAI's technology to train the new OR1 model. Now, Bloomberg sources reveal that the security researchers from Microsoft observed a large transfer of data. This was in the fall by individuals they believe linked to the Chinese AI lab. Joining us more on the story is Tom McKenzie. Tom, look, if this probe, I should say, proves that it did happen, what does it mean for the companies involved? And what exactly do we know so far about what was taken from OpenAI?
Yeah, look, we're being whipsawed, aren't we, in terms of the developments coming through in the AI and tech space as a result of DeepSeek and now this news that maybe when they claim to have done it on the cheap and very efficiency, maybe that's because they were leaning on OpenAI. That again, according to our reporting, tied to Microsoft and the suggestion, not confirmed, the suggestion that what happened in this case was that DeepSeek put its smaller model essentially alongside OpenAI's model and used the API or the application programming interface that OpenAI puts out there for a license, used that to suck up some of the data related to inference. That's how models interact in terms of their answers and questions. They use that data to train their model and more efficiently built out that infrastructure, again, that's giving those gains, that has allowed them to price it very, very cheaply indeed. We're not talking about the data that actually goes into the training of these models. OpenAI keeps that under lock and key. It's not an open source model, but they do license out to APIs so that developers can integrate that into products and services. It's possible that DeepSeek violated the terms of that license. Again, we have not yet had that confirmed, but it does put a question mark if they're leaning on OpenAI and all the work that's been done there, and of course the training on the back of those NVIDIA chips, then maybe that calls into question just to what extent they can make a clear claim to having built a much more efficient model for that $6 million price tag.
Yeah, but I guess if someone else can just recreate it, it still becomes cheaper just in isolation. And Tom, again, whether or not they used OpenAI's model, it's still going to be a headache for all these tech companies that are going to have to get on a call and justify their CapEx. We have Microsoft, we have Tesla, we have others, we have Meta reporting today too. What are those conversations going to be like, Tom? What's expected?
Well, that's going to be the scrutiny, isn't it, Danny, in terms of confirming and giving justification. They've got to answer that ROI question. When you have commitments from Meta and Mark Zuckerberg of $65 billion US, when you have commitments from Microsoft of $80 billion, do they come to the idea that actually with cheaper models, more efficient models, you're going to get greater adoption? Longer term, this means more AI being used by customers, consumers, and businesses. Could be the argument they go to, and therefore their products will remain essential. Meta particularly, given that its Llama open source models are empowering the products that sit on top of that. They can drive ad revenues, for example. They can get these products into the hands of their customers more cheaply. Adoption picks up. It will be the crucial question for them. We had NVIDIA, we had ASML, I should say, coming out, of course, with their earnings, suggesting, and the CEO very clear on this, Christopher Fouquet, saying he still sees AI as that clear driver going forward. So ASML, again, assuaging some of the concerns around the CapEx spend on one level.
Tom, briefly, in 50 seconds, Alibaba telling the world that they've updated their latest model, Qwen 2.5 Max. What is it, briefly? How fast is it? What can it do?
Yeah, there are engineers out there on X and other platforms showing that this is a model that can allow you to book flights. It does that for you. It can look at the intellectual property in videos and films. It's a reminder that China is at the cutting edge of developing AI. They have the data, they have the engineers, they may not have the chips, but they're creating efficiencies. It's not just DeepSeek, it's Alibaba and Tencent. They've been in a price war. That innovation will continue.
And as the President of the United States said, it is a wake-up call for everybody. Tom McKenzie. We await the outcome of those investigations. Tom McKenzie on the tech trail. Coming up with Danny and I, surprise spending announcement by President Trump causes chaos in Washington. We'll discuss right here on Bloomberg Brief.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you some front page news, a look at what's making headlines around the world. First up, the FT leads with this, that Meta's Mark Zuckerberg is exploring buying a property in D.C. Sources say potential property has been identified, and it signals his ambition to work closely with the Trump administration. A Meta spokesperson declined to comment to the FT.
That's what you call getting close to the source of power. Next up on Bloomberg, the EU is proposing a phased ban on Russian aluminium imports. The new sanctions package has one-year quota system, allowing 275,000 metric tons to be imported before the ban. Now, it requires the backing from all EU member states and could change before being formally proposed.
Finally, this one was on the front of most, if not every major newspaper, but the New York Times most certainly leading this morning with a judge temporarily pausing the White House's decision to halt trillions of dollars in federal spending. The decision was made to make sure federal agencies were aligned with President Trump's policies. That, according to the White House, it was a day of chaos trying to figure out what exactly was impacted by this yesterday. Joining us now is Bloomberg's Roz Matheson. So, Roz, maybe that question held off for a few more days with the halt at least going until Feb 3rd. But what has been the fallout from this as we scrambled to try to figure out exactly what this policy was?
Well, as you say, even though it's been paused, and even though the White House clarified that they meant it to be narrower in scope than perhaps it was initially interpreted, there do seem to have been immediate knock-on effects. We had some states saying they were having trouble accessing key portals, including around Medicaid, around housing, and urgent assistance for people. And it seems like this immediately gummed up some of the funds in the federal system. And so it's perhaps highlighting the unintended consequences of this absolute flurry in the early days of the Trump administration to race out a whole lot of changes. Just, you know, dizzying array of executive orders, of edicts and changes, be it on the domestic side, with the deployment of troops to the border with Mexico, to rules around immigration and beyond internationally, and that some of those things in the blizzard perhaps do have these unintended consequences. It also raises a big question potentially for Republicans going forward, and that is, where exactly is the power going to reside when it comes to the fiscal question? Because generally the legislature in the US does have some control of the purse strings, but is there shifting all of that decision making into the executive, and are all Republican lawmakers comfortable with that happening? So there's going to be interesting to see how that conversation evolves and what is the continued role of Congress, if at all, in any of this. But in the immediate term, even with that halt coming, we are seeing some immediate effects of this announcement showing up for some states.
Yeah, it was either a chaotic mistake or a test of constitutional reach. Federal workers have been offered an email called a fork in the road. So this is all the hallmarks of DOGE. This is about get back to work. What are the details of what's been offered to try and get people to resign?
Well, that's right. As you're saying, they're offering buyouts to people who effectively resign, well, about now, if they don't want to be back at work full-time in offices, and very DOGE-like, very Elon Musk-like. And it's interesting to see how that worked for him, because, of course, when he made that the rule at his own business and a bunch of people were laid off or left, they had to rehire some of them because they lost so much expertise that they needed, and they realized they had to bring people back. So perhaps, you know, in this case too, that might end up being revisited, because around 10% of US federal workers work permanently from home, and that can be for a variety of reasons, including their physical ability to get into an office, and many more work partially from home, and whether they're willing to rush to this order or not take the buyout. But equally, a lot of these federal agencies are heavily unionized, and so is this going to get tangled very quickly in a lot of legal action to try and prevent this happening? Will some people take these buyouts and just look for work elsewhere? It's entirely possible. But overarching all of that is the clear sense of a direction of travel from the Trump administration. They really want to shape every aspect of government, from bureaucracy, ministries, agencies, you name it, in what Trump is looking to do with his agenda through this term. And it's going to filter through everywhere.
Ros, thank you very much. Ros Masterson there on the very latest from Washington. We're counting down to an $8 trillion day for equity capital markets. It's going to be a blinder. You've got Microsoft, you've got Meta, and Danny, there you go. We're flat. We're just 1% away from all-time highs on that S&P 500. That's quite shocking given the volatility we've had.
It just underscores who you're going to be listening to, a Powell presser or the tech earnings. We're going to talk to someone who will certainly be listening to the Powell presser. We're going to catch up with Citi's Andrew Hollenhorst. That's next on your Bloomberg Brief.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Well, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of no. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From our global headquarters in New York City, welcome to Bloomberg Brief. Danny Berger and Manus Cranny here. Let's set your agenda.
The first Fed decision of 2025. A pause expected as Powell gears up for the presser with politics on the agenda. Defending U.S. tech exceptionalism, Microsoft and Meta report earnings just days after the DeepSeek challenge. And funding chaos, the Trump freeze on spending is halted for now by a U.S. judge. Danny, good morning. It's a rock and roll day for earnings.
Yeah, and we are already well on our way to unwinding some of the tech losses. The S&P within 1% of its all-time high. The NASDAQ is still up 2% in January. We add some weight to that. NASDAQ 100 futures up 0.3%. You mentioned the earnings. NVIDIA, that is slightly weaker today, but we'll get Tesla, Microsoft, and Meta from the tech sector. Meanwhile, for this bond market, we had a strong 7-year auction yesterday. And then we didn't look back. The rally somewhat continues today. We're lower by just under a basis point, 4.5% on your 10-year yields. Manus, it is a flurry of information. It is whipsaw. What do you pay attention to? Is it tech? Is it policy uncertainty with that freezing order? You'd have to argue it's one of those two. It's kind of like the least watched Fed decision maybe in recent history.
It's almost like we've been flooded with policy, but we're not quite sure what exactly is the policy, whether it's tariffs, whether it's actual engagement with tax, and that's the problem, is that you have a slew, an overwhelming amount of information with very, very little exacting detail.
And if you are a company in this environment, how do you commit to CapEx? How do you commit to hiring when there's that level of uncertainty, especially if you get federal funding? Yesterday underscored that. The rally that we had seen largely post-Trump was the animal spirits, that business was going to boom. Does that now get thrown into question if policy uncertainty is so acute? We got a good reminder of what that kind of unpredictability looks like in a Trump administration yesterday.
There's only two numbers that you need, apart from the Fed. There's only two numbers on this slide. $65 billion from Meta and $80 billion from Microsoft. Your CapEx. Stand up and justify yourself. That is going to be the agenda later on today. Our guest this morning on the Fed is Andrew Hollenhorst. He's looking ahead to the first rate decision of 2025, saying this: pausing rates at this meeting and leaving all options on the table for future meetings will also impart a response to continued policy uncertainty. Delighted to say Andrew is here with us this morning. Andrew, Mohamed El-Erian, I think, encapsulated it brilliantly yesterday. We're in a stop-go pattern now, and we're into the stop zone here. We've been data dependent. Here we are. We're dealing on a daily basis with policy flux. How does he thread the needle today to give himself breadth for neutrality until he knows more about policy?
I think the good news for the Fed is that the data are really setting them up to pause at this meeting in any case. This would be a lot more interesting discussion and a lot more difficult for the Fed if we had things going on in the data that were really pushing the Fed to cut further or pushing the Fed to think about not cutting for an extended period of time. Instead, what we have is inflation that's cooling. I think they're still going to feel good about that. We got a good inflation report for the month of December. And we got a really strong jobs report, so they don't have a lot of urgency to cut. So that just means that at this meeting, it can really just be a place where they take a wait-and-see attitude and say, we don't know what all this policy is going to be. We don't know what the policy will be. We don't know what the timing will be. And we don't know what the economic impact of that will be. So just a really, really easy time for them to kind of step back.
Maybe an easy time for them, save for what I'm sure is going to be a barrage of questions from the press. They're asking Powell how he is viewing Trump's words on interest rates. Look, surely politics is going to be on his mind and trying to defend independence for the Fed. What does that look like, whether it be what we hear from Powell or just the outlook we get from the Fed?
Yeah, you know, we heard this come up in Scott Bessent's confirmation hearing where he was asked about the independence of the Fed. And he said, of course, this administration is going to support the independence of the Fed, but the administration is also going to comment on what they think should happen with interest rates. And we've already heard from President Trump that he thinks interest rates should be lower. So I think we will hear that. Maybe we'll hear that today from the president. We'll hear that at some point from the president. And Powell will respond to that in the Q&A. How will he respond to that? I think we know. He'll say, we're data dependent. We watch the data. We follow the data.
Yeah, well, that's got to pivot to policy at some stage. What's worse for the Fed? One of massive 20-25% slapper taxes or progressive universal gradualism in terms of understanding the policy they need to execute?
Yeah, I think anything that is more gradual, that has more of a runway to it, is going to be easier for monetary policy to respond to. What's very difficult is when things happen very rapidly, they're unexpected. Bank of Canada also has a policy meeting. They have to incorporate these things in their policy making. So that makes it very difficult if there's really uncertainty about big, sharp changes. If what we have is tariffs that are coming online slowly and over time, that's something that the Fed can more easily adapt.
But there's uncertainty around tariff policy, around federal funding, around immigration. There is so much going on at this moment. At what point does that have an impact on U.S. growth as businesses kind of step back and pause as they also try to figure out what's happening?
It's been interesting if you've watched the survey data. We did see some surveys. NFIB small business is probably the best example where there's really a surge of enthusiasm post-election. Since that time, the data have been more mixed. So I think ultimately it comes down to what is the actual policy. Yes, sentiment matters. I'm not saying that it doesn't matter. There can be kind of this virtuous cycle where if businesses think things will be better, then kind of power of positive thinking, things actually will be better. But to your point, what's going to matter? What is the fiscal policy? What is the immigration policy? We're still finding those things out.
And I think we both touched on this. Consumer confidence, took a little bit of a knock yesterday. I mean, we just got to wait and see whether that progresses. A lot of market participants have now got a 30% probability of a rate cut in March. What would it take to get you to a rate cut in March? Because the building consensus before Christmas was the back end of 2025.
Yeah, so the sentiment has really shifted. I know this in my job. We were only getting questions about what would it take for the Fed to raise interest rates, right? That was actually where the narrative was going, where the discussion was going. Since we had a softer inflation reading, again, there is economic data out there. I know we're all focused on DC. Since we had a softer inflation reading for the month of December, I think that really does put March back on the calendar as a possible cut. It's not our base case that they're going to cut at that meeting. In January, and it's going to get really nerdy here, so just to put that caveat out there.
If you're going to be nerdy, this is the place to do it, Andrew, so go ahead.
Thank you. Residual seasonality, the idea that January inflation data just keeps coming in strong. That happened last year, it happened 2 years ago. There's a problem with the seasonal adjustment. If that January inflation reading comes in strong again, then it might be hard for them to get to a cut in March. But if we don't have the same residual seasonality, we might not, and that January inflation reading looks like December, looks like November, which were at target inflation, all of a sudden March becomes a real possibility.
I have to say, you probably feel somewhat relieved this week that probably the tech analysts at Citi got more questions than you did, but I'm sure you got some of it. And I kind of wonder, okay, so you have this narrative of all of a sudden AI can be done cheaper, more energy efficient. if that is the case, and we saw some metals sell off, copper sold off, oil sell off, nat gas was lower, could this put us in another bigger picture disinflationary trend? If some of the spend that we had been doing on energy and on metals starts to wane?
Yeah, so that could be really good news for the economy, right? If you, it's basically a positive supply shock is how economists would talk about that, that you thought this technology was really expensive. It turned out that this technology wasn't as expensive. There's still questions about whether that's the case, but if that is the case, that's disinflationary, that's productivity enhancing, good news for the economy. Can still be bad news for the equity market because some of those valuations were based on you were the special supplier of that investment good that was needed for this build out. So not necessarily good for the equity market, but good for the economy.
Do you think someone asked Powell a question on it?
Probably.
Poor Powell. Don't envy him today. Andrew, yeah, seriously. Andrew, thank you so much for joining us. Always a pleasure to have you on, get your wonderful thoughts. Andrew Hollenhorst of Citi. Okay, a quick check on these bond markets. Not a ton of action this morning. We have seen a rally continue for a second day. A strong 7-year auction yesterday, Manis, and we were just off to the races. It has been bond buying. We are so far away from those calls to start the year. Remember, everyone was saying 5% 10-year yields was the call. That's changed.
I mean, people were talking about 5% and 6% just before Christmas. This is positioning going into this. It's interesting. We've come down about 20 basis points since the middle of January, Danny. So we're setting up. There's been a reversal here. The question is, JP Morgan's client survey, net longs, they're the highest in 15 years going into this Fed and going into the start of this year with equities just 1% shy of record highs.
Well, hey, if growth expectations are coming down, if consumer confidence is coming down, that should mean that yields too move lower. Coming up, we're going to talk about the big tech earnings. You got Microsoft and Meta on tap with Alibaba also offering a new AI product too. A lot to cover. We'll have more on that on your brief coming up.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief, Danny Berger and Manis Cranny in New York. Now, U.S. AI firms are staying alert amid DeepSeek's debut of its latest model. Microsoft and OpenAI, according to Bloomberg sources, are investigating whether DeepSeek obtained unauthorized data output from OpenAI's tech to train its new R1 model. Those sources revealing that security researchers from Microsoft observed a large transfer of data in the fall by individuals that they believe may be linked to the Chinese AI lab and hedge fund. Joining us for more is Matt Bloxham from Bloomberg Intelligence. Matt, if this did happen, if the probe proves that it did, what difference does it make for our understanding of DeepSeek and some of the AI ruptures that were caused earlier in the week?
Yeah, I mean, to be honest, probably not so much. I mean, you can see why Microsoft and OpenAI are kind of looking into this, and they need to because they have fiduciary responsibilities to their shareholders. But I think the important thing here is that DeepSeek has really shaken the market up, and OpenAI needs to be really focused on developing the next generations of its product and really understanding what's the game changer about DeepSeek, which is really that it can perform as well as these big US models for seemingly a fraction of the cost. And so I think that's going to be a really important part of the next generation of AI that comes out of people like OpenAI and Meta. So, I mean, even if they prove that there was wrongdoing here, I think it's going to be very difficult for them to enforce anything on a company like DeepSeek that's China-based.
Matt, Alibaba's just dropped their latest version of Qwen 2.5. So this is DeepSeek followed by Qwen. This is now a much bigger issue. It's not just about China, US. This is about open source versus closed source. What are they promising at Alibaba?
Yeah, that's right. So, I mean, I guess this kind of plays the point I just said that, that the AI market is evolving at a really rapid pace. And, we've seen this with the QN model. I think right now it's too early to say, but obviously the headlines from Alibaba that this new model outperforms the DeepSeek model across a whole range of kind of industry standard benchmarks now. There's a lot of gaming of these benchmarks, so I think we'll have to wait perhaps a matter of hours or days whilst engineers get their hands on this new Alibaba model to see how it performs in real life. And what you tend to find with these large language models is that some of them are really good at very specific things like kind of complex maths computation. Others are much better at natural language and kind of giving really human-like textual responses to questions. So I think we'll have to see how good it is in real life. But as you say, that the whole OpenAI kind of closed proprietary model is kind of really in focus. I think probably for most people that OpenAI open solution is the one that's going to come out on top.
Yeah, again, really prove that this week. I just feel bad for Google and Gemini and all this because by all accounts they have a cheaper model that also functions really well. But we are going to be getting Meta earnings, and we're going to hear from Mark Zuckerberg. We're joking with Andrew Hollenhorst that maybe more people want to listen in on that call than listen to Fed Chair Powell. But how do these tech players, how does Zuckerberg defend all of the CapEx that they've been doing around AI when it becomes clear that there are cheaper options available now?
Yeah, I mean, it's been interesting. We had 80 billion from Microsoft, 60 to 65 billion of CapEx for 2025 from Meta, which really surprised people. I think they're going to hold on that stance for now. They have very clear plans about what their kind of needs are going to be and where they're taking their midterm strategy. Obviously, Meta has its own open source Llama model. They know how that performs. They know where it's going. I mean, I don't think you'll see any kind of knee-jerk reaction, but clearly these companies are very nimble. And if it turns out that Meta doesn't need to spend 60 to 65 billion dollars on capex to deliver the kind of performance they think they need to with Llama, they'll cut back. But I think we won't see any kind of significant shifts in these big US spending programs, perhaps until late 2025, 2026 at the earliest.
Well, a heck of a lot of sentiment hinges on it standing up those CapEx numbers. Matt, thank you very much. Matt Bloxham there of Bloomberg Intelligence setting up the tech day ahead. Let's turn our attention back to politics. President Trump shaking up Washington with a freeze on federal grants and loans and offering federal workers buyouts for those who don't want to return to the office. Now, this is a judge temporarily blocked the spending halt due to concerns over the constitutionality. And Karen is tracking the story for us yesterday. And there was a mass panic on these trillions of dollars worth of cuts that were proffered, stopped by a judge. Tell me this, is this a chaotic mistake or a test of constitutionality?
Well, I think it's a signal of intent, Manus, from the Trump administration that they are deadly serious, both in terms of reshaping the government along their own outlook, their own ideology, and of course, deadly serious about reining in what they consider to be wasteful spending where they can. And of course, in a year when there's intense scrutiny on the fiscal side of the government with planned tax cuts coming down the road. Now, as you mentioned, on the one hand, we had that pause on federal grants and aid, which did trigger a lot of immediate concern, so much so that there was a pushback in the courts against it, that challenge to be expected from NGO groups. There was also confusion about the implementation of it. The White House had to clarify later on that it wasn't as broad in its scope as initially it was interpreted. But again, it spoke to the intent of the government. And on the other side, of course, as you mentioned there, that ultimatum to workers in the federal government to either return to the office or take the option of a buyout, highly unusual program that the federal government is offering. It all adds up to the idea that the administration is very serious in pushing through how it wants to reshape the federal government.
And of course, all these have economic impacts. And on that last point, and we were asking Andrew Hollenhorst of Citi during the break about what the impact could be if you have America's largest hirer, the largest employer, starting to lay more people off and offering people these buyouts. He said you could start to see it show up in the labor numbers in September. How should we look at this sort of thing and the bigger economic impact of offering workers buyouts if they don't want to return to the office?
Well, it's clearly going to be a valid question, Danny. I mean, again, on paper, if we do have a scenario whereby the federal government is losing a significant amount of staff, and as you mentioned, government hiring was one of the key support pillars for the labour market last year. If that's happening at a time when the federal government is reining in its spending where it can, then of course, obviously on paper, that would suggest pressure on the labour market and perhaps less support from the government on the spending side too. But we don't know the details yet. We just don't know how wide and how deep these potential federal employee departures might be. We don't yet know where the government will go in terms of its support for these grant and loan programs that it offers to states, for example. And of course, remember, the Trump administration makes the point that they're also going to push through tax cuts that will ultimately drive growth and investment. But to your point, on a headline basis at least, when you see a shake-up of this scale being touted for the federal government, obviously that would raise question marks about its implications for the labour market.
And we've seen near unity behind most of the confirmations that have been put in front of the Senate. Slightly more contentious ones coming up. What can we expect?
Well, so far, as you mentioned, some of the key appointments have gotten through Defence and Treasury and State, Manus, like you mentioned. But we're now getting into some of the thornier ones. RFK Jr., of course, as Health Secretary, a lot of scrutiny in terms of his views, particularly in terms of his views on vaccinations. We had, of course, the intervention from Ambassador Caroline Kennedy yesterday, questioning his character. So there's a lot of focus over whether or not RFK Jr. will get that support to go through to the next stage. But by all accounts, it seems like so far, you'd have to say President Trump has, broadly speaking, kept his cabinet profiles, cabinet picks on track. Howard Lutnick, of course, another one for the trade side of things. Not expected to get as much opposition there. And of course, there's a lot of focus on when the trade team will actually be put in place, because as soon as the trade personnel are in place, then we might start to get much more clarity on the implementation of the new trade policy.
And what a year it's been. And to Corinne, thank you so much for joining us. I'm sure another busy day ahead for you. Coming up, speaking of a busy day, Fed decision, tech earnings, all of that on deck. We're going to set you up for your trading day next on your brief.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. The least anticipated Fed's rate decision at 2 p.m. Eastern Time. Don't tell Chair Powell I said that. His news conference will be at 2:30 p.m. We're also going to have the Senate holding confirmation hearings for Howard Lutnick and RFK Jr. Plus, this is what everyone will be listening to, the earnings from Microsoft, Meta, Tesla, IBM, all of that, Manus, comes after the market close.
Well, tech got a nice little bounce this morning in the form of ASML in Europe. The US shares are gaining, shrugging off concerns from DeepSeek and staying bullish on the AI demand. Lam Research, what we got there, Danny, is higher ahead of their earnings after the market close. And again, it's all about the chip-making tools. That's what ASML is, along with Lam. And then F5 Networks extending their post-earnings jump after raising its full-year growth forecast. But all ears and attention will be on the capex and justifying the capex, Danny, of those two big hyperscalers.
Look, there's probably going to be a lot of relief, and you're referring to Meta and Microsoft, of course, who report earnings. There's going to be a lot of relief that there hasn't been follow-through from Monday, that we've seen a break in the worst of selling. You can see pre-market, some of those shares are still off, specifically Microsoft. I think NVIDIA is still down in the pre-market too. But maybe this suggests that it was just this kind of mini panic, and we're reassessing things after because we don't truly know the impact of having cheaper AI. A lot of it's going to come down to what these companies say, Manus. And as we were talking with Bloomberg Intelligence's Matt Bloxham, maybe they don't change their spending plans yet, again, because they won't fully understand what the impacts are.
No, I mean, plus we've got this investigation now in terms of DeepSeek. Well, how do they get a hold of their capacity to build this model? What are the impacts of that? You've got Alibaba coming into the market and saying, we've also revved up our AI proposition. Looking at what Peter Oppenheimer said at Goldman Sachs, he said the AI sell-off isn't the start of a bear market. That's triggered by falling profits. And the cheaper entrants deliver increased confidence.
Or Nassim Taleb saying that this is just the start and there's going to be more wild swings of NVIDIA. But are you surprised that he said something like that, calling another gray swan moment coming to pass? So perhaps that's not so surprising.
Indeed. Well, somebody, you know, if you cry wolf often enough, eventually it happens. Tonight, there's a little bit more of me. We're not together, but this time it is 9:30 Eastern, the latest episode of Bloomberg's Chief Future Officer with the future of Prudential's Janella Frias. She joins me for a conversation, and it was good, along with the CEO. That's it for Bloomberg Brief. Yeah, no, it was good. It was actually quite interesting. A lot of AI in it. There you go. That's it from Bloomberg Brief. Surveillance up next.
what would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It'd be very interesting to see what the earnings reports are going to be like. It's not great to have the entirety of your capital in 7 names.
It really does accentuate that need for diversification.
When you have leaders in technology, they tend to stay leaders.
Big tech, you've got growth at a reasonable price. I'm not necessarily worried about the valuations here.
These big tech names, though, are not an obvious loser to me.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now as we come into Wednesday within 1% of all-time highs on the S&P 500. Equity futures, the bounce continues, up another 1/10% on the S&P. On the Nasdaq, up by 0.4. Going into a monster day. The first Fed decision of 2025 later on this afternoon. 30 minutes after that, you'll hear from Chairman Powell. And then the earnings, Microsoft, Meta, and Tesla.
I thought you were going to say, and then the main event, which is earnings from Microsoft and Meta and Tesla, because as much as we want to hear from Fed Chair Jay Powell, and as much as people are going to be parsing through the nuances of how he carries himself and how he discusses Donald Trump and what kind of facial expressions he has, really it all is going to be about big tech, how much they plan to spend on capital expenditures, and how they plan to adjust and adapt their artificial intelligence spend and development in light of some recent efficiencies.
How they defend this on the earnings call will be very intriguing. I'm looking forward to the Microsoft one. It's going to be a big one a little bit later on this afternoon. Then Meta. Meta only last week talked about spending $65 billion on projects linked to AI. There was this line in there that they intend to build a data center so large that it would cover a significant part of Manhattan.
They will have to justify that, and then they will have to give some sort of guidance about whether that spend is more of a one-off in terms of infrastructure now, or whether it's sort of the idea that you cannot throw enough money at the infrastructure tied to artificial intelligence. This is the distinction in this story. That the spend so far has been on the chips and the data centers. Are we shifting into a world where you have to be putting it into something else about the applications more broadly? And is that what we're going to hear potentially from the executive branch of these particular companies?
With regards to these numbers, we've talked a lot about DeepSeek and the earnings call. We haven't talked much about the earnings themselves. Demonstrating the power of earnings, ASML over in Europe. Coming out with numbers this morning, reported bookings of 7 billion euros. The estimate was for around 3.5. The stock is up over in European trading right now by close to 9%.
This is a fascinating story on several fronts. This Dutch company makes the equipment to manufacture chips. TSMC is one of their biggest customers, and China was one of their biggest customers, the biggest customers for most of the past number of years. That has shifted. And the question is, especially given that the shares are down 25% since the July peak, how much are we looking at the rest of the world taking over market share where China can no longer play? Again, the idea that these players, given that their equipment is so much in demand, can continue to do well regardless of China's presence.
Should we do some tech earnings and a little bit of Federal Reserve? Got to sprinkle in some Federal Reserve, right? I think there is a difference between a skip and a pause. And I wonder how they sort of navigate that issue. We've had a cadence that sounds like this, a 50 basis point reduction, a 25, a 25, and a lot of people think they will skip today's meeting. Is that a skip or the start of a prolonged pause?
So the distinction here being that a skip implies that there still is a downward trajectory to rates. A pause means we have no clue. A pause would be incredibly hawkish. It would basically give a sense that maybe they really are done and would edify what a lot of people are saying. Whether he indicates that, his goal today is to basically not address this question, not do anything. Basically, say as little as possible. Will he do his inner dove? Let's see. This is what a lot of people are going to be listening for.
The consensus on the street at the moment seems to be closer to maybe a pause than a skip. We'll see if that changes later on this afternoon. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore on the AI revolution, Michael Widmer of Bank of America ahead of the Fed decision, and Ahmed Khan of Morningstar as big tech earnings kick off a little bit later this afternoon. We begin this hour with stocks rising as traders await the Fed decision and earnings from big tech. Julian Emmanuel of Evercore staying overweight tech on a 3-month view. While the dust settles, many of these names, particularly the semis, may remain pressured on a 3-quarter and 3-year view. You want to buy these. Julian joins us now for more. Julian, good morning.
Good morning.
I can't believe it's only Wednesday. I said on Tuesday it felt like it's already Friday. Let's get into these earnings a little bit later. You say maybe buy over a 3-quarter multi-year view. Why?
Because essentially what we saw over the last 3 days tells you that the importance of AI as a revolutionary technology that's going to advance the world is not only robust, but is an absolute imperative, okay? And the stocks reacted the way they did on Monday because of this sort of psychological displacement with regard to DeepSeek. But what it really means is that now the race is on to implement. And from our work, 2025, and the work we did almost 2 years ago now when AI first it was introduced, is that 2025 was going to be the inflection year in adoption, and this catalyzes it.
So what does that mean for sector preferences as we shift away from enablers to adopters? What does that look like?
So there has been, over the last year or two, a swath of companies across industries who constantly speak to the idea of AI. Again, a lot of it is largely anecdotal because I think there's been a reticence to talk about what cost savings looks like versus things that drive revenue. And frankly, companies are still trying to figure out what that mix looks like. But those are the companies that are forward about it, and we're going to hear a lot more. It's not just the earnings calls of the Mag 7 this period that matter. It's the earnings calls of the other companies, and those that are talking about it and telling you how they're deploying are the names you want to own.
Do you think that this is actually the tipping point that so many people were waiting for, where suddenly some of the biggest winners, and it's not just NVIDIA, it's also the power generators, which didn't recover really yesterday, are not going to necessarily benefit in the same way that they did in 2024?
There's a bifurcation going on. And, you know, actually, if you're Jay Powell and you're Donald Trump, you like the fact that yields have come in over the last couple of days because the implication is the news that we had over the weekend in terms of DeepSeek is actually a disinflationary impulse. But the downside of that is, as a power producer, it's much more difficult to see what the next 3 years looks like. And whenever you have a company or a theme that one moment had sort of this concept of infinite growth, whatever that number was, and then all of a sudden it's infinite minus a handicap, that's punishing for the stocks.
Is that the right way to interpret the move in yields? That it was an expression of greater disinflation as a result of technological advance, or was it simply a risk-off move, knee-jerk, basically buy bonds?
Well, you would have said that, except for the fact that yields ended up on their lows yesterday, basically unchanged, with the market recovering. So I think there was certainly an element of that on Monday. But the other message, and again, obviously overnight, we've seen more rhetoric about the intention to reduce the size of government. All in, this has calmed the bond market down. And from our point of view, talking about the names in the sectors that we like, the bull market leaders, yields remaining calm is a very important part of that thesis.
It certainly depends why. And the conference board numbers yesterday weren't great. Why have we settled down on bond yields? Is it just good stuff, or is there some bad stuff in there too?
Look, even when things are going gangbusters in an economy, you can always find the 1, 2, or 3 items that are unsettling. You look deep enough, you find them. Frankly, from our point of view, you're in a mode where, and again, I'll go back to your introduction, we think it's skip, not pause.
Okay, why?
Because basically the trend towards inflation, if you think about it, the last several months, very much like the spring of 2024, you had a couple of months in there where the thesis was questioned about the trend of travel of inflation. You paused, but yet it kept going. And the weakening of some of those data elements, continuing claims moving to new multi-year highs among them, tell you that the trend of inflation moving lower is intact, and that's what the Fed wants.
Is that called trade dependent? We'll head down to Washington and catch up with Anne-Marie in about 5 minutes' time. Is your call on a skip and not a pause trade dependent? And what happens this weekend? Avoid tariffs or implement them?
So, very good question, and I think the answer there is if you look back, Donald Trump learned a lot from his first term in office, okay? And one of the things that he learned was that the bond market really could call the shots for the degree of policy implementation and, you know, how far you pressed once things were announced. So in that respect, there is an element of that to it, but we do think that, you know, you go back to the original appointment of Bessent, there is an acknowledgement of the importance of financial markets and the desire not to disrupt that narrative to be able to long-term implement policy.
We'll get into the details when we speak with Anne-Marie in just a moment, but you said, just in general, as a stock analyst, as an equity analyst more broadly, looking at the path of policy, it looks like basically a repeat of 2018, and yet in 2018, the S&P ended the year down 6.25%. Why is this time different?
So if you look at it, the path in 2018 was very volatile, and actually at mid-year, you were up substantially, almost double digits. And then what happened was you got to a point where the bond vigilantes stepped in. In 2018, 3% on the 10-year yield was the equivalent of 5% on the 10-year yield right now. And we've already seen, you know, whether it's the last couple months or going back to the start of this bull market cycle, that once you get towards 5%, the markets don't like that. And so that is well known.
Which is the reason why the commentary that we will get this afternoon won't necessarily be from Mark Zuckerberg. It won't necessarily be from Satya Nadella. It won't necessarily be from Fed Chair Jay Powell. It will be from Donald Trump in response to Fed Chair Jay Powell, with regardless of what he said. And if there is a pause and not a skip, if there is an indication that this is it and they are done and that, frankly, there's even a chance of them hiking rates again, how big would the tantrum be in markets?
Pretty substantial. I mean,
you're asking how big would the tantrum be at the White House?
Well, I mean, we already know that answer. I mean, the question is, you know, this is sort of par for the course. Don't they already have it in pre-write? They basically just press go. Anyway, carry on.
But again, the point being here that at the valuations where we are in the market, both, you know, less than perfect and or very good news is met with violent reactions. So basically, we have DeepSeek on Monday. We have, you know, a pretty substantial sell-off. But that was preceded by 10 days of literally parabolic gains, given the fact that the inflation news was so good. So where's the next 3 to 5%? Well, let's see what we hear from the White House, and, you know, let's see what the corporate, what the dialogue around DeepSeek is in these reporters this afternoon.
Yep.
But the long-term trend of travel is still higher in our view.
We'll head down to Washington in just a moment. Julian's going to be sticking with us. Equity futures right now on the S&P positive by close to 0.1%. Coming up on the programme then, we'll catch up with Anne-Marie in just a moment. Before we get there, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Bloomberg has learned that Microsoft and OpenAI are investigating whether Chinese AI startup DeepSeek obtained unauthorized data output from OpenAI technology. Sources say that Microsoft had observed individuals that they think might be linked to DeepSeek taking a large amount of data using the OpenAI application program interface, or API. Earlier, the White House AI chief, David Sachs, told Fox News that there was evidence that DeepSeek had leaned on the output of OpenAI's models to help develop its own technology. Bloomberg has learned that Apple has been secretly working with SpaceX and T-Mobile to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update released this week now supports the technology. The initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile had previously said that they plan to expand into data connections and voice calls in the future. Now, John, you mentioned this at the start of the show. Shares of ASML are surging nearly 9%. That's the most since 2020. The Dutch company said that bookings in the fourth quarter were worth twice as much as analysts had expected, with the AI boom fueling demand for chip-making machines. ASML CEO also said that AI will bring more opportunities to the semi-industry. The company expects China sales to fall about 20% of total revenue this year. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. ASML absolutely crushed it. If you get similar performance later from Meta and Microsoft, we won't be talking about Monday for a long, long time. Absolutely amazing numbers from ASML.
Yeah, especially if you get the sense that they're actually monetizing AI. Of course, the details will be important in terms of that expenditure, the capital expenditure. Think about what happened to GM yesterday. They put up great numbers, and then people said, what about the tariffs? And then their stock tanked. So could you see something similar happen here?
How much weight can you put on the outlook when it's so dependent on what happens over the weekend? Up next on the program, counting down to the tariff deadline.
The president has made it very clear, again, that he expects every nation around this world to cooperate with the repatriation of their citizens. The February 1st date for Canada and Mexico still holds.
That conversation just around the corner. We'll catch up with Anne-Marie in Washington, D.C. in just a moment. From New York City this morning, good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Equity futures on the S&P positive by about 0.1% on the S&P 500. In the bond market, some stability, 452.63. Lots of stuff going on. Earnings this afternoon, a Federal Reserve decision that people are barely talking about, Bramo. And then that trade deadline a little bit later. For the Federal Reserve, I do think it's important to try and recognise, is this a skip or a pause? And I imagine Chairman Powell will be challenged on that matter.
How much is this just one moment on a path downward for rates? If this is a Fed that indicates they are done, or that there is a high likelihood of them being done with respect to further rate cuts, expect a pretty big move in the market that right now is sort of anticipating 1, 2, 3 rate cuts at a time, where some people are seeing the idea of disinflation continuing to take hold.
The focus this morning is get through the Fed and then focus on the earnings a little bit later, and let's see if we can get through the Fed quickly. Under surveillance this morning, we're counting you down to the tariff deadline.
February 1st date for Canada and Mexico, also the China tariff that he has discussed. He rejected the 2.5% tariff. He said that was a little bit too low. He wants it to be higher. The president has made it very clear, again, that he expects every nation around this world to cooperate with the repatriation of their citizens. And the president has also put out specific statements in terms of Canada and Mexico when it comes to what he expects in terms of border security. The February 1st date for Canada and Mexico still holds.
So here's the latest this morning. The Saturday deadline fast approaching. President Trump preparing to slap Canada and Mexico with 25% tariffs, and still a consideration to put 10% tariffs on China. Part of the effort from the President of the United States to address illegal border crossings and the use of fentanyl. Anne-Marie joins us now from Washington for more. AMH, that deadline fast approaching. What's the latest?
Fast approaching, and the press secretary says it stands. So potentially on Saturday, we could see tariffs as high as 25% for both border countries, Mexico and Canada, and maybe even 10% when it comes to China. Or do we see something like we saw over the weekend, where Trump threatened all these sanctions and tariffs, said that they were in place, and then we saw moves very quickly by the Colombian government, and then he said those tariffs, those sanctions will now be on reserve. So I think the market has a lot to learn this weekend, how high those numbers are, how quickly they get enacted, and potentially are they going to be used as a negotiating tool to try to get especially Canada and Mexico to the table earlier to renegotiate USMCA? What exactly is he going to get after by coming out earlier on these tariffs? Because remember, his first day in office, he signed this executive order to have a memorandum to look into, to have a review on trade when it comes to America's trading partners worth billions of dollars. That date is for April 1st. So regardless of what we get on Saturday, I think we're going to learn a lot. One key thing is, of course, we know with tariffs, they can be enacted immediately. But in the past, we have seen governments give importers about a 90-day ramp-up period. So potentially, we are going to learn a lot depending on how these tariffs are enacted, what level they are, and whether or not importers are going to get a leeway of 90 days.
We will learn a lot, and potentially not just on the U.S. side, but also what kind of retaliatory tariffs might be put into place by the likes of Canada and Mexico. What have we heard so far on that front?
Well, look, when it comes to Canada, they have this nuclear option, of course, when it comes to oil, because the United States imports that heavy crude, that viscous oil from Canada, and it's really hard to get from other places unless you want to say open up a lot more trading with places like Venezuela. That's not going to happen under this government. But that potentially what Trump is trying to do here is, remember when he first talked about tariffs when it came to Canada, we saw immediately Justin Trudeau fly to Palm Beach, go to Mar-a-Lago. Likely what will happen is this will lead to some sort of negotiation and potentially bring up those talks that are supposed to happen at the start of 2026 when it comes to USMCA.
Anne-Marie, also lots of questions about what a president can and cannot do. What's the latest on spending and giving a big exit ramp to a lot of federal workers as well? What's the latest on those 2 points?
Yeah, it's a great point, because we had a judge last night block basically what they were doing in terms of a federal freeze. What the president was trying to do with the Office on Budget and Management was freeze a lot of federal spending, grants and loans, especially when they say it comes to ideological provisions, things like diversity, equity, and inclusion. They did have to put out a memo after this because people were panicking, and it did wreak a bit of havoc, and remind people that, no, we want to make sure you still get maybe your student loans or Social Security or Medicare payments. So there's been a lot of confusion on this, but I think what you can take from this signal is that Donald Trump is acting like a CEO that wants to downsize the federal workforce. And we saw that again, offering buyouts for some federal employees, but they need to let them know within the next few days if they want to take it or not. They'll get a buyout if they want to leave their government job.
Mate, appreciate the update. Anne-Marie down in Washington. More from Anne-Marie a little bit later. Lisa, we were talking about this earlier this morning before we came on air, that we were basically seeing from Donald Trump, the president, a similar approach that we've seen from Elon Musk, the CEO, but this time to federal government and not to a private company.
Similar approach, I would say basically the same approach. In fact, the email sent to federal workers yesterday had the subject fork in the road. That is the same email subject that Elon Musk used in an email to Twitter, now X, when he was talking about downsizing the staff there. Can you do the same in a federal government? The courts will decide.
Julian Emanuel of Evercore is still with us. Julian, a lot to unpack here. Let's start with trade. Lisa mentioned GM. She's right to pick up on General Motors. GM's numbers weren't bad. The outlook was okay. Nothing wrong here. Stock was down by close to 9% at the close. How investable are some of these sectors, some of these stocks, without getting that clarity on trade?
Well, I mean, the share price reaction yesterday spoke for itself. But again, similar to how one is thinking about the share price reactions in the Mag 7, et cetera, on Monday to DeepSeek, these are the kinds of things that if you're a long-term investor, you know that whatever comes out in the beginning, whether it's 25% across the board or what have you, and we know that the automobile industry is going to be the most impacted if that kind of tack is taken towards Mexico, but that it is not likely to sustain itself infinitely. It sort of never has. And those are the kinds of times, particularly at valuations when you're talking about 4 and 5 times earnings, granted the earnings will be handicapped, but that's where long-term investors find value.
Just hold on a second. Are you saying that you bought GM yesterday?
I'm not saying
okay. I'm just wondering, is it too early, right? Is it basically this right now is noise and you can't really get involved in it, and at a certain point you can start to say, all right, now I can start picking up the pieces?
Well, again, it's a valuation sensitive thing. A lot of these companies, if you look at it, we like 5-year average valuations, okay? A lot of these companies are trading at substantial discounts to their 5-year average valuation. So I have a numerical advantage coming in that allows me to sort of ride out the volatility, even if it's multiple quarters, for that kind of, potential change in earnings.
Julian, certainly a volatile week, that's for sure, over the past few days. Julian Emanuel there of Evercore, with equity futures just about positive on the S&P 500. Bramo, I can't believe we're still not through January. This has felt like a lifetime, hasn't it?
Well, buckle up. We have 11 more months, right? And this is basically just the beginning. You're going to expect this, right? It's going to be shifting narratives, and it's just happening that much quicker. I just wonder who trades on all of the headlines, because they change day to day.
Well, someone has been. I will say this, on the East Coast, it feels like a grind getting through January, doesn't it? And then February. And then March.
Okay, I get it. You want the sun. You want the sun. You want an earlier day. I get it.
But at least in New York, you get the promise of that. I always say this. In the UK, you don't get the promise of a summer. So it's just that grind for the first quarter, the second quarter, and then summer never comes.
It will come. It'll be good.
From New York, this is Bloomberg.
the Vivian Tom clientele. Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Decent bounce in yesterday's session. The bounce continues. We are up by 0.1%. Tons of earnings a little bit later after the closing bow. Before we get there, a decision from the Federal Reserve in the bond market. 2-year, 10-year, 30-year. Your yields look like this. A bond yield that's just about unchanged on a 10-year at 452.84. At the front end of the curve, the 2-year 419.29. And in foreign exchange, a tug of war between the ECB and the Federal Reserve over the next 24 hours. Euro-dollar down by 0.2%. Lisa, let's call this 104. Is it called a skip or a pause? In the Federal Reserve news conference a little bit later. And then for the ECB, do they just keep on cutting?
Or does it even matter what the Fed says or what the ECB says? And really, will it be at the White House? What type of tariffs get announced that will determine this currency pair? At a certain point, you want to think it's sort of a race to a bottom and maybe the ECB could win, but now they're both backing away from it. Meantime, I have to say, the dominating force has been tariff talk. And so I guess I can't really make any predictions right now.
Isn't there just a strong argument one way or the other to cut interest rates of the ECB compared to, say, the Federal Reserve?
You would think so, and yet recently there has been stickier inflation. And their one mandate is inflation. They don't have that dual mandate. And this is the reason why people are backing away for the potential to cut rates, even if, economically speaking, that might be the right thing to do.
It hasn't been great when you speak to ECB officials, and I caught up with one last week. They'll make the point that we're still making our way back to neutral. Still not having a conversation about getting accommodative, and we'll see if that changes tomorrow morning.
Yeah, I mean, that's the key question. When do they start talking about growth and generating growth and not just kind of sticking to that idea of what is the numeral on the back of that 2%? That's problematic. Let's get that down.
ECB, just around the corner. The Federal Reserve up first. Under surveillance this morning, shares of ASML surging the most since 2020 after the company delivered better than expected results. Booking orders coming in at $7.4 billion in the fourth quarter, more than double what analysts had expected. That stock is higher by close to 10%.
To me, this is fascinating because it was a company that's been really hammered by some of the orders by the U.S. to not sell some of their advanced chip-making equipment to China. Can the U.S. take over that potential share? So far, the answer is yes, along with a whole host of other countries. But this is sort of the poster child that has been affected by some of the U.S.'s orders pre-Trump and how they're adapting going forward at a time where this very much is in demand.
So they got hammered on Monday. They were down by 7% at the close. Closed last Friday at 700. We're trading at 705 right now. So it's like DeepSeek never happened. Earnings matter. And let's see if we get a reminder again a little bit later this afternoon.
People have also reassessed how much chip makers will get hit if there is some sort of greater efficiency, because if you have greater adoption, you'll have greater uses of chips. It's not the chips that have gotten most hammered and that hammering has stuck. It is the power generators and some of these other areas. So that's been the takeaway over the past 2 days of whipsaw.
Didn't see a convincing bounce. EQT, Constellation Energy, Kinder Morgan, pipeline operator, all those things. I was looking at the same thing yesterday. Didn't see a convincing bounce through the session.
And Tom Kennedy of JP Morgan Private Bank yesterday, he indicated this was the one area that they're rethinking as a result of some of the efficiency, not necessarily the chip makers, not necessarily some of the big tech players. And that's what we saw play out in the equity market yesterday.
ASML right now positive by 9%. Elsewhere, a federal judge temporarily blocking the Trump administration from enforcing a new directive to hold trillions of dollars in federal spending. This coming as President Trump is offering buyouts to federal employees who won't comply with his demands that they return to the office. This could have big economic consequences.
And constitutional ones, too. And this is what I think might be the design, that actually this is a president that wants to establish constitutional precedent ahead of making some big changes. I was looking back to the 1970s, where President Nixon came out with a whole host of different campaign issues and different budgetary issues that he passed. And as a result, Congress passed something basically saying, no, we have the power of the purse, not you. This challenges that, and this is something that Donald Trump has said he wants to challenge. And if this gets through and he has that authority, you can imagine he will implement a lot more sweeping changes to come.
And then there's a new wrinkle in the Federal Reserve's outlook. The Federal Reserve decision coming at 2 p.m. Eastern Time. 30 minutes later, a news conference with Chairman Powell. The central bank widely expected to hold interest rates steady, giving themselves more time to lower inflation and assess the impact of President Trump's policies. We are very, very policy dependent at the Federal Reserve. And by policy dependent, I mean White House policy dependent on the FOMC.
And each Fed member has a very different take on exactly how those policies have the potential to reverberate through the economy. Chris Waller, remember, coming out and basically saying that a lot of these tariffs will be disinflationary, if anything, and that they do nothing to really interfere with the ongoing trend downward. At the same time, you have others that feel differently. So where does Fed Chair Powell stand, and how much does he want to ignite the fury of the White House?
Hopefully we find out in the news conference a little bit later, but I'm with you. We are going to get a live blog at some point, aren't we, from the White House on Federal Reserve decisions?
If we don't, I think a lot of people would be very surprised, given the fact that this is Donald Trump who came out and actually said he knows interest rates better than Jay Powell. He thinks they need to be lower, much lower, and let's go. So there is this feeling that he is going to continue to job out on the
To be honest, at this point, I'd be disappointed if we didn't hear from the
I think a lot of people
president a little bit later this afternoon. Let's turn to commodities. Gold rebounding from its Monday drop amid uncertainty over President Trump's proposed tariffs and ahead of today's Fed decision, now roughly $30 shy of its all-time high. Michael Widmer of Bank of America follows the metals closely. He joins us now for more. Michael, it's good to see you.
Good morning.
Let's start with Monday. What did we learn about the relationship between risk assets, equities and the like, and gold?
There is not always a clear relationship. I think that's what I would say. I think generally when I look at what happened on Monday and kind of the volatility that we had on the equity side, look, gold has just been very resilient. And I think we've actually stuck to our $3,000 pounds price target for this year because everything that you've just said, there is a lot of tension in the system, in the markets at the moment generally, with the uncertainty about Trump, the uncertainty about the relationship with the Fed, and ultimately that's one of the factors that should attract investors to the gold
You believe
market.
it still has defensive properties, risk mitigation characteristics, even with Monday's move?
It does, but I think there is a more structural element to it. It's not just, look, equities go down, therefore you have to look for a safe haven asset. I think when you're looking at the global macroeconomic environment, I think that tension potentially between, well, the Fed should keep rates high, Trump wants to have them lower, is one of the things I think that causes a lot of apprehension. When you are like a non-US central bank and you hold a lot of your assets in US dollars and US treasuries, and you see the tensions that coming up, say, on the fiscal side in the US at the moment, deficits at 6 to 7%, with risk of increased volatility on that front as well. Do you really want to keep a very large share of your holdings in treasuries? Look at China last year. Total FX holdings declined. Gold holdings actually increased. And that is a good guidance on how popular gold actually in the current macroeconomic environment still is with some of the central banks.
Gold tends to be a haven asset, as John was mentioning, and tends to get bid up when economic activity goes down. At the same time, there are a lot of people getting increasingly bullish on a lot of industrial metals that typically do better when economic activity goes up. How much is that just simply a tariff play, and how much is that something that really does speak to the expected build-out of the real economy, of the real kind of asset world?
You mean on the industrial metals
Yes.
specifically? Look, I think there's two parts to that. The first is the supply side. We have genuinely underinvested in the industrial metals on the supply side for the past 10 years. Miners generally tightened their belt. I think there was a bit of a misallocation of capital during that time. And what you have now is kind of that push for the energy transition, a structural trend. China's grid spending carried the global copper market for the last 2 years. Now you have got the US and Europe coming in, and you just don't really have the tons available. So you have got this kind of cyclical metals becoming more of a structural play where demand just keeps trending higher and keeping the market relatively tight. And of course, on top of all of that, you have potentially for bottoming out in global growth as well at some stage. That adds then to the upside too.
Just to underscore what you're saying, is the U.S. taking over where China once lived when it came to demand for some of these industrial metals?
U.S. has exported a lot of its metals demand, offshored a lot of the metals demand to China. So on the copper market, the U.S. is 10% of copper demand, of global copper demand. China is 50%. But what we are seeing right now is that the U.S. is trying to get some of that metals demand back into the U.S. by actually rebuilding some of the domestic supply chain. So the U.S. is not necessarily picking up of where China left it off. China is still quite strong, but the U.S. becomes an additional factor where you can actually see, rather than like a decline in demand, which we've seen in the last 20 years, the demand is actually starting to come back and increase and adds to some of that tightness.
We do have potential supply in the United States of America. I think it's the resolution mine in copper that Rio has the opportunity of really running and meeting 25% of annual copper demand of the United States. Do you see them making a move on the supply side story with this administration?
I think it's... I mean, we're talking also about tariffs on copper in the last few days from President Trump to actually rebuild the supply chain. So there's certainly an awareness that you would like to increase domestic supply, but particularly when you're looking at resolution copper, there's a handful of mines actually in the US that, with all the best intentions, didn't make it to the market because you have, for instance, local resistance to those operations. Permitting has been quite difficult for those. So you also need to change, I think, the operating environment, helping the miners to actually bring those mines to the market. Rio Tinto said recently that they're actually quite optimistic now in getting that mine through.
How much would that change things if things like that came online?
It would help, I think, because we have got a relatively empty global project pipeline. So we need literally every single project that we see right now coming on to prevent rising deficits in the copper market. It wouldn't necessarily change the underlying dynamics. We would still have shortfalls on the copper market.
In the meantime, it's not just with respect to a shortfall in supply, it also is the potential for tariffs. And Trump was speaking in Miami recently and said, I'll be placing tariffs on steel, aluminum, and copper and things that we need for our military. How much do you expect that to end up really adding an additional boost to pricing going forward?
No, look, it's one of those sectors. I think we just have assumed that the metals is available as we need it. And defense spending is now starting to pick up, as is energy transition spending in a lot of countries. And we just turbocharging metals demand growth in an environment where already now, just at the start of that happening, we know that we don't have enough metals available. Look, copper last year, when I look at global PMI, it should have traded a third lower where it was, but it was just very resilient. When you're looking at all the macro issues that we have thrown at the copper market, I could have, in the past, easily justified a bear market. And now all of that spending that you've just said is basically coming through, and that just holds, adds a lot to the tightness in the copper market.
When you put it all together, there was 10 years of a bull market where all of the metals that you covered did really well. Then there was 10 years of death where basically it bottomed out and there was a real rethinking of how important metals were to the physical worlds that no longer seemed to depend on things that were physical. Are we now entering a new bull market for the metals that you cover?
I think starting with public awareness, yes, I think there is certainly much more awareness now that you need those metals to run your economy. And I think governments, with all the push on the AI side, for instance, realize that you can't build electricity networks, power, and data centers without having access to some of those metals. So I think what comes first is the demand will go up, and then with a lag, potentially you get more supply into the market. And that's exactly what is driving the tightness or the support to the prices that we see at the moment.
Michael, enjoyed this. 3K target on gold, 3,000, right?
Yes.
Year end. Appreciate it. Thank you, sir. Michael Widmer there of Bank of America on the metals market. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Trump has invited Israeli Prime Minister Benjamin Netanyahu to a meeting at the White House next Tuesday. The early sit-down, confirmed by the Prime Minister's office, comes just weeks before the end of the first phase of the pause in fighting in Gaza. Starbucks reported better than expected first quarter earnings. Same stores sales fell 4% compared to a 7% slump in the prior quarter. Its new CEO, Brian Niccol, is focusing on improving the store experience. This week, Starbucks brought back ceramic mugs and the condiment bar. It also plans to cut 30% of its food and drink lineup to simplify the menu and speed up service. Novo Nordisk's popular weight loss drug, Ozempic, has been approved by the FDA to treat chronic kidney disease in patients with type 2 diabetes. Studies have shown that Ozempic can reduce the risk of death in patients with kidney disease caused by diabetes. Novo Nordisk gaining just under 1% in the Denmark trade. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, earnings from the Mag 7.
It'll be very interesting to see what the earnings reports are going to be like this week. Magnificent Seven are magnificent for a reason. Does this mean that there are other companies in other countries that will compete and challenge that dominance? Sure, but that world existed last Friday as well.
Numbers from Microsoft, from Meta and Tesla, all coming up a little bit later on this afternoon from New York. This is Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Equities on the S&P positive here by 0.1%. Lots of earnings a little bit later. And a Federal Reserve decision in the bond market. Yields going nowhere. The 10-year 453.24. Under surveillance this morning, earnings from the Mag 7.
It'll be very interesting to see what the earnings reports are going to be like this week. I don't think the U.S. exceptionalism story was built just on ChatGPT. I mean, I think it's built on this idea that A, we are the greatest innovator in the world. Magnificent Seven are magnificent for a reason. One of them owns social media, the other one owns smartphones, the other one, I mean, you can keep on going down the list. So yes, does this mean that there are other companies in other countries that will compete and challenge that dominance? Sure, but that world existed last Friday as well.
So here's the latest this morning. Microsoft, Meta, Tesla kicking off Mag 7 earnings after the closing bout. The results coming as China's DeepSeek AI prompts concerns about US tech valuations and competition. Ahmed Khan of Morningstar has a hold rating on Meta and a 590 price target. He'll be looking for information on AI monetization, content moderation changes, and possible job cuts on the company's call later on this afternoon. Ahmed joins us now for more. Ahmed, welcome to the program, sir. It's good to get your thoughts on the program, and I want your thoughts on Monday before we get into the earnings a little bit later. Something interesting happened. Meta closed the day positive. Microsoft did not. What's the best way of explaining the difference between the two?
First of all, good morning. Thanks so much for having me here. The way we think about it is that a lot of investors obviously got worried about what that means for some of the Gen AI investments, especially as it relates to CapEx. Going forward, whether that CapEx is a good sort of use of capital. Now, where Meta, we think investors had a nuanced view, was that with AI or LLM prices going down, you would see Meta benefiting from using that sort of generative AI throughout its advertising products. So that was, I think, that was the nuance that was built in with Google and Microsoft being down, but Meta being slightly up that day.
For Meta specifically, Ahmed, with that in mind, is it easier or harder to justify the CapEx spend that they unveiled last week?
It is certainly interesting, right? I think the way we think about Meta and Google and Microsoft and Amazon is that you have this commodification of complements, right? So we think of generative AI or LLMs and Meta's advertising product, for example, or advertising sales as complementary products. As the price of generative AI goes down, that means Meta can actually use generative AI to create better content creation tools, create better content creation recommendation tools, and obviously monetize, have better monetization on their ads as well. So the value of the ads product goes up. Now, you could make similar arguments for Microsoft and Google as well. They obviously have a variety of different products that would be complementary to Gen AI as well. But that's the way we think about sort of Meta's Gen AI play, and we think of it as a smart decision.
I mean, there are a lot of issues that are facing Meta that have nothing to do with exactly anything in their control, including what happens with TikTok. And I wonder if you're expecting any kind of commentary today about whether Meta could potentially bid for it, what the potential exit of TikTok from the market would do, and how they're preparing to try to gain market share, as there are questions swirling over that platform.
First of all, I would just like to say that it's highly unlikely that Meta would be allowed to bid for TikTok just because of antitrust concerns. I know the antitrust environment is going to be different under a new administration, but still, like, if you think about Meta's dominance of social media, I think it's going to be tough for them to bid for it. In terms of Meta actually gaining market share, if TikTok was to go away, we actually have good data for that, right? So you had India that banned TikTok back in 2020, and after India banned TikTok, you actually saw sustained increased engagement for both Meta's Instagram and YouTube Shorts, which are the two sort of complement or substitutes, rather, for TikTok. Similarly, when Meta had an actual outage, when all of their applications went down, during that time, you saw TikTok and YouTube usage actually increase, again, showing that sort of like substitution effect. So certainly, if TikTok is banned in the US, we would see Instagram, which is obviously owned by Meta, to be the biggest beneficiary. But our base case does not include TikTok being banned.
There are reports this morning that Mark Zuckerberg is looking at properties in Washington, D.C. He already has a property in mind. The idea here is to get closer to the president. We saw him at the inauguration. He has been someone who has a constant presence down in Mar-a-Lago. As an analyst, how much does that actually influence your view of the company, as essentially a greater leg up with this administration could potentially be beneficial to the company, as we have seen with Elon Musk?
I would just like to say that, companies' lobbying efforts are nothing new. We've seen this in tech before. So that's just the first thing I would say. The second thing, obviously, we wrote a piece on the effect of the elections, especially as it relates to big tech. And we had the view that a Republican sweep would actually be beneficial to big tech, not because we were expecting all these big tech companies to actually get closer to the new administration, but rather, some of the antitrust headwinds would moderate, some of the regulatory headwinds would moderate, and we see that effect going forward as well.
Ahmed, appreciate your time, sir, as always, and your input going into numbers a little bit later on this afternoon. Ahmed Khan there of Morningstar, ahead of numbers from Meta and Microsoft. There's nothing new about this. There's one thing new about this: the party's changed. These companies have been cloaking themselves in liberal values for years and years and years to insulate themselves from the regulatory impulse of the left, and now they realize they've got to do something similar on the right.
It has been a pretty big about-face, and we have seen that pretty dramatically. What I'm curious about, particularly with the Elon Musk effect, is that it has basically put a spotlight on this dynamic in a new way, just based on even the stock valuations and some of the regulatory structure for automated cars, right, for automated driving. So you just wonder, is there an extra lever that you can pull if you are closer and have the ear of the president in terms of deregulating certain sectors and moving toward other things? I mean, this has always been true. It just is a lot more transparent, perhaps, this time around.
Do you think so? I think it was transparent last time around.
It's much more, well, really, the same kind of public sort of...
So billionaires making big donations to the Democratic Party repeatedly.
Big donations is different than going down and, basically trying to create that connection with the person and talk about how wonderful they are. We don't see that usually. Do you hear that from the big executives where people would come out and say Biden is the best president that we could potentially have?
Well, no one would go that far.
Well, I'm just saying.
I've seen him over the last 12 months.
Okay,
I'm not sure they could get him on the phone.
I'm just saying, it seems like there's a shift in tone. You could say it's business as usual, and frankly, what Anna was talking about is that their assessment was that Trump administration, actually a red sweep, would be better for big tech because of the regulatory types of constraints that would be removed.
We'll see what kind of changes we actually get and who it benefits, right? And let's be consistent about asking these questions. This is not aimed at you. The complaints that I've heard from Senator Warren, what is it you want? What is it that you want? I didn't see those complaints over the last 10 years when the money was going in the other direction.
It's fair. And honestly, I think that this is an important thing to keep calling out, that where is the consistency in some of the complaints with respect to media, with respect to dominance in certain areas. You're right. I think it's very hard to get consistency. I mean, whether it comes to the idea of TikTok and what to do with that, or whether it goes to this question of whether big tech firms are too big. I mean, these are all fungible issues that have bipartisan support on both sides. We're used to.
Got to call balls and strikes. Do you see how hostile the press pack were in the briefing room yesterday? Didn't see much of that over the previous 4 years, did we?
It's a new regime, and there's been a real challenge to legacy media over the past couple of days.
And that challenge gets greater, that's for sure. Equity futures on the S&P positive by 0.1%. Up next on the programme, Lisa Shallard of Morgan Stanley, Nikolai Tangen of the Norwegian Wealth Fund, the former senior White House trade advisor Kellyanne Shaw, and the former Kansas City Fed President Esther George. The second hour of Bloomberg Surveillance is up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Underlying sort of impulse of the economy has been for this gradual disinflation, but inflation is still sticky.
What we have is a very imbalanced economy, and the labor markets are still cooling.
I think what the Fed is signaling on Wednesday is super important for the rest of the year.
I'm not expecting much from this meeting, just because there's so much in flux.
The Fed has got to get more strategic in its approach and has got to stop being excessively data dependent.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now. Let's kick it off with the scores. Equity futures positive by 0.1% on the Nasdaq 100, higher by 0.4. Big afternoon coming up for the Nasdaq. We'll get numbers from Microsoft, numbers from Tesla, numbers from Meta. Before we get there, we've got a Federal Reserve decision just around the corner as well at 2 p.m. Eastern Time, followed by a news conference with Chairman Powell at 2:30.
This is the dark horse event, the one that people are not looking forward to, that think that it's going to be incredibly boring, and that essentially he'll say nothing, and then we can all move on to Meta and Microsoft and Tesla earnings. But to me, this has possibly one of the more disruptive potentials, given the fact that if there is an indication by Fed Chair Jay Powell that they might not cut rates at all for the remainder of this year, that would be a massive risk-off event for the entire market.
Skip or pause, and how much weight can you put on the forward guidance? And this is something that we were talking about earlier with regards to a company you brought up, General Motors. How much weight can you put on the outlook, given how trade-dependent that outlook might be? And we might get some new information on trade over the weekend. Do you really want to get out in front of that if you're Chairman Powell?
For General Motors, it was an issue of they had everything that looked pretty good, beating expectations, and yet they are potentially the most susceptible to tariffs, particularly on Mexico, that could come into play as soon as February. Do tariffs have the same kind of economic ramification more broadly that the Fed has to take into consideration? That, I think, is the key question, and we've heard Chris Waller's take on this, which is not really. And I guess that, to me, if you do hear from Fed Chair Jay Powell that they could have similar broad-based ramifications for the overall economy, that would also be a potential market-moving event.
We don't assume, we don't guess, we don't speculate, but we kind of do. That's what we learned in December. Some of us do. Let's see if they assume, guess, and speculate a little bit later on this afternoon. Coming up this hour, we will assume, guess, and speculate till 8, we'll catch up with Lisa Shallon of Morgan Stanley as investors await the Fed decision. Nikolai Tankert of the Deutsche Bank weighing in on U.S. tech dominance, and former senior White House trade advisor to Trump, Kellyanne Shaw. We begin this hour with stocks higher, investors catching their breath before the first Fed decision of 2025 and big tech earnings this afternoon. Lisa Shallon of Morgan Stanley saying the surge in long-term bond yields has created a headwind for U.S. equities, which have ridden valuation expansion for the better part of 27 months. The market narrative is now focused on show me earnings achievement. Lisa joins us now for more. Lisa, good morning.
Good morning.
Got some earnings achievement over in Europe. ASML, just absolutely stunning. And we saw how stock investors rewarded them.
Yes.
What would you look for from some of the big tech players, not just this afternoon, but over the next week?
So look, I think obviously, tech is under the spotlight, not just given the fact that their performance has been somewhat really lackluster since, the first week in December. But the expectation for 2025 and 2026 is that earnings growth rates are going to decelerate, right? And that element has been math, and that's what's kind of baked in. And so I think people are looking for that guidance more than what they do for the fourth quarter, but looking for that guidance to see, are in fact tech companies more measured or are they more optimistic? And I think that's that guidance, forward guidance, that's really going to carry the day here because, coming into 2025, 2026, for tech companies, I think some of the expectations were a little bit more realistic.
Does it get harder to justify the big spending they've been doing following the news of the last week and the price action of Monday?
Certainly, it raises the question on what is your CapEx efficiency, right? Do you really need to spend, as much CapEx and build as many data centers with as many GPUs that use as many NVIDIA chips? Are you going to be able to, through process and software engineering, as we've seen, do things, cheaper and faster, especially if you're willing to use an open source chassis? And I think that these open source chassis are going to get more and more and more sophisticated, and they're free. And that's I think, the magic here that we're going to have to watch. And look, I don't think that this is new news to Sam Altman or to the folks at Microsoft and Google, but I do think they're going to now have to talk about it.
Earnings season used to be launched by the big banks, and it seems as if now that's shifted. It really is the tech players, and there is a broader economic read-through depending on what happens there. We've been talking a lot about whether we are reaching the tipping point at which investment in AI is moving away from the chips and the data centers into broader application. What would you have to hear at today's earnings reports to think this is truly that tipping point?
I think it's them not,